open this hearing of the Senate Economics References Committee for the inquiry into the Sterling Income Trust. The Senate referred this inquiry to the committee on 20 October 2021 for report by 1 December 2021. This is a public hearing and a Hansard transcript of the proceedings is being made, although the committee may determine or agree to a request to have evidence heard in camera. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as contempt. It is also contempt to give false or misleading evidence to a committee. If a witness objects to answering a question, the witness should state the ground upon which the objection is taken, and the committee will determine whether it will insist on an answer. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. Such a request may also be made at any other time. Witnesses should speak clearly and into the microphones to assist Hansard to record proceedings. I would also like to advise witnesses that answers to any questions on notice should be sent to the Secretariat by 24 November 2021. I would ask photographers and cameramen to follow the established media guidelines and the instructions of the Committee Secretariat. Please ensure that senators and witnesses' laptops and personal papers are not filmed. I ask everyone to ensure they have switched off or turned their mobile phones to silent. I now welcome Ms. Annabelle Crowther. Thank you for appearing before the committee today, and I invite you to make a brief opening statement should you wish to do so. And for the Hansard record, could you please state your name and the capacity in which you appear? Ms. Crowther.
Good morning. My name's Annabelle Crowther. I'm here on behalf of my father, Tony Crowther, who is a Sterling New Life tenant, as well as who had his funds in put into the Sterling Income Trust. I also was an employee of the Sterling First Metro Group, who I worked as a sales rep, selling the Sterling New Life lease products. I'm here to answer whatever questions you have for me. If you want to go ahead with that, I'm happy to do that now.
Okay, thank you. Thank you very much, Ms. Crowther. I'll hand over to Senator Pratt to ask you some questions. Senator Pratt?
Thank you. I'm here. Excuse me for being slow in getting on the video. And I want to say thank you, Ms. Crowther, for giving evidence. I don't know why. Sorry, I've got some reverberation going on here. I'm muted at my end. Just let me see if I can get on the headset. That might assist. So I've just got to turn off the sound on my laptop. My apologies for that. That should hopefully have fixed that. Are you able to hear me now?
Yes.
Thank you. I want to begin by thanking you for giving evidence. I can only imagine what a traumatic experience this has been for both you and your father. May I begin by asking you, we've heard from some of the financial victims, so I think we understand the circumstances, dreadful circumstances of many of the investors. Are you able to tell us a little bit about the sales practices that you were asked to employ when selling these products? What kind of practices were employed as far as recruiting and marketing to investors? Were you asked by the company to do?
Okay. Marketing was happened in numerous ways. It was advertising home opens in the local newspapers, community newspapers. As the company moved forward, there was some radio advertising through Heritage FM. My employment with Sterling, and I think what I need to do is firstly also correct the record. My employment was from June 2017, June 2016 to 2017. At the end of my submission, there is I left in April 2019. That should have been 2017. So I'll just make that clear.
No, thank you. That's helpful.
There was a number of things I did. Like I said, advertising through the community newspaper Home Opens. There was leaflets that was put out into the mailbox, which is how Dad got involved with the Sterling New Life lease. There was also seminars that were conducted. I attended about 3 seminars, basically to talk to people, give them my story, how we got into it. And also we were given information brochures to give to people to sell the Sterling New Life lease. We were also given information to find investment properties and speak to landlords. We were also asked to go into the community and go to like the lawn bowl centres and ask whether we can put a presentation on. There were the type of activities that we were asked to do in order to try and get business.
Yep. And how are you paid for that work? Was it an hourly rate? Was it a long-term contract? Did you have a 9-to-5 job, even though you would have been working outside those hours?
No, it was all commission-based. It was commission-based based on what we sold on the life leases.
Yeah.
Yeah, I did.
And did you ever receive any payment?
I received a payment for selling some shares for the company, and I received a payment for the landlords that who brought their properties into the Sterling New Life scheme. So, yeah, that's all I...
And in terms of after you... when did those commissions start getting paid to you, and when did they stop getting paid to you after the company collapsed? What was the nature of those arrangements?
That was it for me. I received nothing else. I just received I think it was like $600 for the shares that I sold initially, and the money from the landlord, once they signed up to the RMA, the rental company, property management company.
So they were one-off commissions?
They were one-off, yeah.
Yeah, so in terms of working them, did you consider it a full-time job, or you were just working on a commission-type basis to sell these products?
I worked around my children's school hours.
Yeah.
So there were some days where I could, if they were in after-school care at the time, I think they were in after-school care 2 days a week. Those days I would work a little bit longer, but the majority of the time was either Monday to Friday with an occasional weekend if there was a home open.
Sounds like slave labour to me, given the commission-based work you were doing.
Yeah, I was also, this work I was not qualified to do. I had no experience in the property market. Within about 2 months, I believe, of being being there, we were told that we had to get our property manager's license or our sales license. And there was quite a bit of a rush to get everyone to get their sales license because of the nature that you needed to go to RERA for a week and do the training. It wasn't convenient for me having 2 young kids, so I opted to do an online course, which I never completed.
Yeah. And was there ever an expectation that you should have qualifications in financial advice as well?
No. I wasn't allowed to give financial advice. Any financial questions, we had to put them back to head office, who would deal with that side of it.
And what kind of questions were you redirecting to head office to deal with in that regard?
They were questions based on how the money was invested and how the units worked. So basically that was the only questions really that I put forward. And do you know what people were advised in relation to how the money was invested and how the units worked? No. I know from my dad's experience, we were told that the Sterling Income Trust funds would be put into the development unit where he could earn up to 20%. But how, when we initially got told, I don't think we were overly concerned about how the money was going to be raised. It was more of making sure that the tenancy agreement, that he had security for the next 20 years, which was the lease that he signed, and that, he had the security and the comfort of having a roof over his head. And so, in a sense, you were employed, although it doesn't sound like you were employed to be an example of buying that kind of security. How would you describe your job? It sounds like mostly your job was promoting your father's experience as an example. I would agree with that. I was there to tell my story, and that's what we did. We did numerous articles for retirement groups. There's also a online, there's a video that we produced with other people that were involved in the Sterling New Life program. My only experience with this is the story of getting Dad into the program, how we found it, how what we did. My story was what I used as the basis of selling the product. Thank you. You said in your submission that you received training from, and I think part of it's been redacted, the company and the scheme. Yes. And I'm just rereading your submission. You say a quote, you've quoted, you said, at the sales meeting, Ray Jones told you this was a lazy way to sell Sterling New Life leases and they no longer have this as an option. And this is where they were to purchase your own property and lease it back to you.
and that you had a client who was interested in that, and that they said that was no longer an option. Or did Ray Jones ever explain why that was a lazy way to sell a Sterling New Life lease, and that they no longer had this as an option?
No, I was dealing with some clients who saw that the option of their property being purchased and then they could release it. I received a call from them saying that they were interested. We met with them. We saw their property. We did all the, with the help of the my boss at the Sterling Metro Group, we found what the property was worth because we got a real estate agent to value the property. The lease was on average of 60% of the market value, and then we would put the proposals then to the Sterling First Group. I kept on asking what was going on with this, and then I was asked, because I wasn't attending every sales meeting, and I was asked to attend this one and to ask the question to one of the to the general manager, ask him what is happening with this particular client, which is when Mr. Jones, he was quite angry and kind of annoyed that the question was asked, saying, basically he was angry, saying that we don't do this, it's a lazy way for you guys to make money. So, yeah.
But never explained why underneath. It just said it was lazy rather than explaining the whole business model behind it as to why it wouldn't suit the company structure. You say in terms of there was a lot of discontent and mistrust among the directors. Did you ever hear what that was about? Did you ever hear, for example, about regulators or government departments making inquiries and what the implications of that might be?
There was nothing about government agencies. It was more the discontent of if you had someone interested in a property that was based in Bunbury, you were kind of you're kind of going into their territory. So therefore it was like, well, that's where, if you're going to start taking or start putting people into my area, then they want a kickback. There was a lot of...
So it was a kind of turf war thing as opposed to... did you ever get the sense that directors or other people in the company had things they wanted to hide?
Yes.
And what gave you that impression?
I was not allowed to attend, or was asked not to attend, any of the sales meetings. I was going at least once a week at the very beginning.
And that's where people actually signed up, you mean? Or...
No, it's the sales meetings, the actual corporation sales meetings. I started going...
You were a salesperson,
Yeah, I was going at least once a week, and then suddenly it was like, oh, you don't need to go now, you don't need to go now. And then on the sales meetings, I was said, oh, can you come here? It was mainly, I felt that I was being used to prove a point that there were issues within the scenario with the clients who were wanting to get to sell their house to Sterling, and then we were told that we're no longer doing that. Rather than a communication going out saying this product's no longer available, I felt that I was being used to attend this meeting to ask the question, to say, hey, I told you that, you know, this isn't going to happen, or things are changing. It's hard to explain, but...
No, that when you're dealing with people like that behind this company, that's not surprising to me. Are you able to tell us the names of the main movers and shakers in the company that you worked with, that you recall? You've
got Ray Jones and Ryan Jones. Ryan was the dealer, was the principal or the licensee of RMA.
They're different people, Ryan and Ray, are they?
Correct. Yeah. Yep. They're father and son.
Yeah.
You had Phil Lux, who was one of the directors. He also was the Sterling First Metro director. You had Brian, I can't recall his surname. He was the one that we would go to for any financial questions that needed to be answered, and for questions, get clients to call him. There was Blair Armstrong. He was with Mr. Bell, who would look at the properties, how they and work the numbers on those properties, so that we knew what the value of the property was, what the percentage of what the life lease was going to be. We would receive a summary of all the properties, how they actually, what the price of the Sterling New Life lease was, and how the money would be distributed over approximately about 20 years, I believe. There was Sandy Regas, who was the general manager. Sandy, I worked closely with Sandy. She did most of the marketing by organising the seminars, the newspaper home opens. She would liaise with the companies, because the company works through a restructure where a lot of the directors did their own thing. And then as the company grew, they started to reconstruct and kind of bring everything back to head office. So head office would look after all the marketing side of it, do the Facebook pages, and kind of bring it all together there. That's why they incorporated all the training and the marketing at head office.
Thank you. Have you ever been interviewed by ASIC or any government agencies?
Yes. Dad had a visit from ASIC. They were there for about an hour, where they talked to Dad about ASIC, about the Sterling Income Trust. They didn't allude to anything, that there was any problems. Dad just said it was just a general chat, felt very comfortable with them. The following day, I contacted Mr. Bertram at ASIC, and we had a lengthy chat. He believed that Dad didn't really understand how it worked. I went through the modelling of the Sterling New Life lease, how it worked, what we did, and he said he'll be in contact if there was any more information that I could give him. I said that wasn't a problem. I asked if there was any concerns. At the time, he said no. I have emailed Gary Bertram to ask, because Dad was more concerned, again, with the tenancy, having the roof over his head, and asked if that would be affected in any way. At the time, he said he couldn't tell me, gave me the information about the stop order, but still I haven't heard from them, and I had no reason to be concerned that there wasn't an issue. We did receive an email from Ray Jones just shortly afterwards to say that ASIC have been in contact, it's just routine, there is no issues at their end, and should the time come that you want to leave, your money will be reimbursed to what was in the into the Sterling Income Trust. So
you had no idea really that money was no longer that was being frittered away and was no longer there. Can I ask you, in terms of those tenancy agreements, were the people that had people sign those agreements, as far as you were aware, all licensed real estate agents? And as I understand it, there's a little bit on the lease that was put there about how the rent was to be paid. What was your understanding of those details on a lease?
It was a standard lease agreement that was Ryan Jones was the one that dealt with the lease side of it. The money the rental was going to be paid from the investment of the Sterling Income Trust. They had signed up to 20 years plus 20 years. When I joined the company in June, that had changed to 5 years with 7 renewals, which made it a total of 40 years.
Yeah, and do you know why that was changed to 5 plus 5 ongoing like that?
From recollection, it was because of the WA Department of Commerce or Housing has said that the 20-year terms were not valid in WA, so they had to change it to WA laws, which was 5 years.
Yeah, that was my understanding too. But if you've paid your 40 years up front in any case, I can't see how an option for a further lease would have been valid past the initial 5 years anyway. But I guess that's not something I expect you to answer. May I ask, Senator Scarr, do you have questions now while I take a pause? And I just wanted to, I know we're in camera now, but I can see names I don't recognise. I'm assuming they can't hear us.
Senator Pratt, I don't think we're in camera now. We will be going in camera.
Okay, that's fine.
And can I do have some quick questions. I am alive to the time. Ms. Crowther, how much longer can we have you for?
As long as my kids don't barge in through the door.
It's very early in the morning here.
Yeah.
Okay. All right.
I have to say, you're doing extremely well for 6 o'clock in the morning.
I'm up at 5, so okay. 10 minutes
joining
at the
us
max.
so early.
10 minutes at the max. Okay. So my questions only take 5 minutes, and then I'll give the call back to Senator Pratt, and she can use the balance of that 5 minutes. But we'll make sure we're finished by 20 to the hour, whatever the hour is over there. I'm in Queensland in daylight saving time, so it's all too complicated for me. Ms. Crowther, in your submission, you refer to the fact that you and your father went and saw some lawyers who gave some advice in relation to the documents. That's correct?
Yes, that's correct.
And
we had spoken to our real estate agent about what we were looking to do, and she suggested this particular law firm, as she's worked with them in the past. We've never used that particular law firm. So when we got our product disclosure statement, we also got other information regarding the Sterling New Life Lease program. We went to this law firm and asked them to read the information and give us some feedback on the program. The feedback was it was good and that he would consider putting his own mum into the program. When I joined the company, I will say that I was approached by Phil Lux and was asked the question, would this law firm, Freeshaw & Freeshaw, consider, do you think they will let us put clients through to them? And I said that was something that you would need to ask them because they knew the product, they understood the product. It might have been a good way of getting clients to talk to someone who knew and understood the product. Looking back now, that should never have been done.
Can I ask you, did they raise any concerns with respect to what would happen in the event that key companies, entities within the structure became insolvent?
The lawyers didn't, but the meeting that we had initially, we were told that if the company went down, then ASIC would, Theatre would then Theatre management would take over the management of the company. The Theatre is an ASIC approved management agent. They will take over the running of the company until a new owner could be found. But nothing was mentioned if Theatre went down.
Have you subsequently gone back to the law firm and whoever the lawyer was you spoke to and raised with them the circumstances that your father is now in light of the advice they gave you prior to your father entering into the arrangements?
We haven't gone back to the law firm. We are in discussions with someone to maybe look at a different avenue.
So you don't, if you're uncomfortable, if you're uncomfortable about going into further detail in relation to the matter, that's okay. From my perspective, it is a question I've asked a number of witnesses who actually were either A, referred to a law firm, or B, found themselves or obtained legal advice as to what the advice was and what they have done subsequently given what has transpired. So it's a question which I've been asking witnesses, and I've also been asking witnesses ever as to whether or not any concerns with respect to legal advice that was given had been raised with the relevant law society or with the Attorney General's Department in Western Australia.
It is something that we are looking into. But I haven't been directly to the law firm, but it is something that we are looking into.
Okay. Well, those are the only questions I had. So I'll hand back to you, Senator Pratt, and you've got the remaining 4 or 5 minutes. Thank you.
Thank you.
Thank you very much, Chair, and thank you, Ms. Crowther. What do you think should be the outcome here for people like your father who've been affected by this?
Obviously, compensation, or for them to at least get their money back. But I think the important thing is we need some sort of an advisory body or some form of body where we can go to say where we can maybe look up this product and see that no, it's not good because of this because of
Yeah.
these factors.
The laws
Yeah.
are changing in that regard, but they didn't
Yeah.
change quickly enough in this case. Yeah.
Where the information, where we get them from, we've been from AFCA to Worrells to Tennessee WA to ASIC, and it's just a constant bouncing. You're going from one place to another. No one's got any real answers, and we're all in limbo. And I think that is the biggest problem, is the fact that we're all in limbo, not knowing what's going on. And we're talking about elderly people who are frightened about not having a roof over their head. We've already seen people being evicted. Dad left his Sterling New Life lease because the landlord or the mortgagee was wanting them out so they could sell the property to get his money back. And that wasn't pleasant. You know, there was a court case for an eviction, but rather than him go through that, I just told him, we'll just get out of it. We don't need to be a part of that.
Yeah, yeah. And I can see from your evidence that you were asked really to target particular types of investors, elderly, people who are downsizing. Are you able to give us something are you able to explain to us kind of the framework of the type of investor you were asked to market yourselves to? And I think that's probably the last question I've got time for.
The Sterling New Life lease was the biggest investment. It was never... The investment side of it was a small part. The bigger picture was actually talking about the tenancy. You've got the freedom of the property. It was a small entry fee. There was nothing coming out. You got your money back. That was put into whatever was left in the income trust. You would get back. The landlords, to approach them, they were offered slightly higher market rental prices in order to entice them, but they were also enticed with the fact that they would have a long-term tenant, and also should they need to leave, have to sell their property, Sterling First Group would buy the property or find an investor for it, that way securing the tenancy for the Sterling New Life leaseholder.
Yeah.
And in terms of shares, Dad bought $10,000 worth of shares into the company, thinking that it was a good product, something for the grandkids.
That's really helpful, because I can see from that kind of how you were asked to sell the product in terms of the financial outcomes that you were selling.
Also, the other thing is with the scheme was also, the Sterling First Metro Group, there was a lot of discussions about if you had a parent who was looking to downsize, you could get them into a property, but what it is that the kids will buy that property, put their parents into it. The investment from the Sterling Income Trust will pay the rent, therefore pay the mortgage. Therefore, you as a family member would benefit by having the mortgage paid. That was the other way of, keeping it within the family.
Keeping a family home within the family while realising capital on it. So that was another target market for people.
Yeah.
I want to thank you, Annabelle, for coming forward to tell your story today. It's extremely helpful, and particularly given the early hour. I'm also in Perth today.
If there's anything else, my submission is brief. It's only part of it. There are other things that
Is there anything you want to put on the record that we haven't asked you about in terms of things you think that would help the committee?
At this point, it's been a bit early and I've got to sort of sort the kids out. There are things that maybe that could be added. I'm quite happy to have a look at my submission again and maybe and look at adding to that. And then it's up to the committee to decide how you want to approach it. I'm quite willing to do
the
that.
stuff that you've told us in relation to how you were asked to explain the financial product and the lease agreements compared to what's actually in the product disclosure statements is very helpful in particular.
Okay.
Thank you, Ms. Crowther. We, as Senator Pratt said, we really do appreciate the time you've taken to be with us today, and we wish you all the best, and your father all the best.
Thank you very much. Thank you.
All right, so I now welcome representatives from CPA Australia. Thank you for appearing before the committee today. And I'm just seeing you now, so that's all good. Excellent. I invite you to make a brief opening statement, should you wish to do so. And for the Hansard record, could you please state your name and the capacity in which you appear? Thank you.
Thank you. My name is Ketty Waller, Head of Public Practice and SME at CPA Australia.
Michael Davison, Senior Manager, Advocacy and Retirement Policy at CPA Australia.
Excellent. Thank you.
Thank you. We will make a brief statement. Thank you.
Thank you.
Thank you for the invitation to present to the committee today. Firstly, we would like to acknowledge the traditional owners from around Australia and pay our respects to elders, past, present and emerging. We extend this acknowledgement to all Aboriginal and Torres Strait Islanders people who may be joining us today. CPA Australia represents the diverse interests of more than 168,000 members in over 100 countries and regions, supported by 19 offices around the world. We support the Parliament's decision to call on the Senate Economics Reference Committee to undertake an inquiry into the collapse of the Sterling Income Trust. While we are not in a position to specifically comment on ASIC's oversight of Sterling Income Trust, we believe this collapse warrants further consideration and assessment to determine whether the appropriate regulatory settings are in place to prevent future consumer losses, in particular from failed registered managed investment schemes. For example, we believe it is reasonable for an individual considering investing directly into an ASIC registered MIS that holds an ASIC issued AFS licence to take a level of comfort that the company has had an appropriate level of assessment and oversight from the regulator such that it is appropriate for that MIS to be commercially operating. We question the appropriateness of the current regulation and oversight of registered MIS products if a commercially flawed business model can be approved and offered to the community. Of further concern is that often these products are complex and high risk, yet they are marketed directly to consumers through seminars and targeted advice. We believe a review must be undertaken to assess the adequacy and effectiveness of regulation and oversight of MIS to ensure that the community is appropriately protected and to assist in the prevention of future consumer losses. Regulatory reform is also essential to ensure that in the future all victims of financial product failure and or poor financial product advice can access appropriate and efficient means to seek justice and redress, including adequate compensation. However, the narrow scope of the proposed compensation scheme of last resort means that the MIS and other complex products would be excluded. This exclusion will leave many consumers who invest directly into these schemes, such as Sterling First, ultimately unable to seek appropriate compensation or redress in the event of a future collapse. This will have a significant impact on the wellbeing and financial security of these individuals and will place further pressure on the social security system as victims will be forced to rely on the age pension. All financial product providers and advisors, not just those in the retail financial advice sector, have a shared responsibility to lift the confidence and trust in the sector. We therefore believe the scope of the Compensation Scheme of Last Resort Bill must be amended to include all financial products to ensure all consumers who engage with a financial product, with or without seeking professional advice, have access to compensation and redress. Thank you.
Thank you very much, Ms. Waller. I'll pass the call to Senator Pratt, who has some questions. Thank you.
Thank you, and thank you very much for CPA's excellent submission. The Compensation Scheme of Last Resort is currently before the Parliament. Do you think it's amendable? Did you have any? I know Treasury went through a consultation process. Have you been drawn on further other than your own submissions to that process?
Yes, we actually were engaged with Treasury in a number of conversations as well as our submission. And to answer your question, we think the actual bill can be amended to broaden the scope.
Are you able to give us some more detail about your views, how it can and should be amended? Is it relatively straightforward?
It would require some structural changes to the bill, which could definitely be done, and we'd be happy to propose such amendments and help redraft with those amendments. The thing that we think is missing is that at the moment it's focusing on more around the advisory component and putting the focus on those providing advice. But as we can see in the instance of Sterling First, those individuals may not have sought professional advice, or where they have, it's actually not been in probably as broad as they needed. And if that was to go through, then they would actually be excluded from compensation under this scheme because MIS would be excluded. So we definitely think that products need to be included to ensure that individuals who don't seek professional advice can still have adequate redress and compensation.
Okay, and do you have any, in terms of your discussions with Treasury about that, did they push back against that? How well do you think they understand these issues?
I think one of the challenges is that the scheme has been drafted and proposed based on historical instances and what we've seen in the past, and it's not really looking at the forward future and what we're actually seeing in the sector. So the number of complaints and unpaid determinations is definitely shrinking in the advice sector, in the professional advice sector, but we are still seeing these instances of product failure, and that's actually not being addressed through this bill. So whilst I think there was definitely a need to have a basis to develop the scheme and looking at past evidence to actually help draw that conclusion, I don't think it's actually being progressive enough. And to your point earlier, looking at the future regulation that's coming into this sector that is really going to change the way advice is provided.
You've said some strong things about professional indemnity insurance and the non-payment of AFCA determinations. Are you, I'm aware that complainants, Sterling victims who were insured or apparently insured, and they've not even necessarily been able to get hold of the insurance policies when they take their claims. Are you able to give us a bit more background in relation to how PII applies to those who produce and offer complex, high-risk financial products?
Certainly.
You should have to be insured in order to offer such a product so you can remain registered. But we note that insurance premiums are going up, but surely an inability to access insurance because it becomes unaffordable is a sign that there might be too much complexity and risk in the product itself? What's the relationship there, please?
Yeah, I think it's an excellent point. We are certainly seeing a hardening of the insurance market in the financial advice and financial products sector. And we are hearing that that is actually making it difficult to secure insurance, and there are long lead times, leading potentially also when securing insurance to have some exclusions, which to your point also leaves consumers exposed, that there may be gaps in the potential cover even where insurance is in place. I think another concern is that we know that when you apply for an AFSL or have a registered MIS, that there is a need to demonstrate appropriate compensation means are in place through professional indemnity insurance, but the ongoing oversight of that is not as consistent as it potentially could be. If we draw comparisons in the tax practitioner space, for example, there is a requirement for individuals to demonstrate at the time of renewal and ongoing that they have PI in place. We think that is something that could strengthen this sector. And to your point, it would actually expose if there was gaps or products not securing adequate cover to actually step in and question the validity of those products.
So in that context, some of the examples here was that in terms of a determination being paid through AFCA, just say someone had invested $170,000, the insurance policy didn't cover the first $100,000. But then nevertheless, there was one, even though people haven't been able to get a copy of it. Can you unpack some of those in terms of how the adequacy of an insurance product to cover these kinds of investments?
I think it goes back to the point we were just making earlier in terms of these exclusions and understanding what's actually in the terms of the policy. It's one thing to have cover in place and to say that you have professional indemnity insurance. It's another to actually ensure that that cover and scope is adequate for the advice or products that are being offered under your registered MIS or your AFS license. And I think this is something that we're concerned about, is that there's not this ongoing oversight to understand the potential gaps that may be existing within the marketplace, and that this is something that definitely needs to be addressed to ensure we're meeting community expectations in this space.
How is it possible not to be able to get hold of the insurance policy that covers your product?
I know as part of your obligations, an individual or a product provider needs to provide, for example, a financial services guide or a PDS that talks about having these adequate compensation requirements. It's not to my understanding, and Michael, you may want to just confirm, to provide a copy of that professional indemnity insurance. Rather, it's about confirming that you have adequate measures in place.
I would just add to Ms. Waller's comments. It is surprising between the regulated documentation that is required, such as the PDS and the financial services guide, that the insurer wasn't in a position to provide the actual insurance policy.
So, and I think we've covered. Is there anything you want to add on that? Because it's not an area I understand, so I'm I guess trying to work out how to ask the right questions. Yeah.
Definitely. So I think, professional indemnity insurance is absolutely critical in terms of ensuring a pillar around meeting community expectations for protection and ensuring that there's adequate redress and compensation. We know that there's definitely challenges happening in this market, and we know that there are leading to some potential gaps and exclusions. And we think this is definitely an area that needs to be explored further, so we can ensure that that is identified and appropriate measures are put in place so we don't end up with these sort of challenges. We have recommended, you will have seen in our submission, a thematic review around professional indemnity insurance, so we can actually understand what is happening in more detail in the market, both in the advice and the product sector, and then look at how we can address those potential challenges or gaps that may be identified.
Yeah.
In regards to a compensation scheme of last resort, appropriate professional indemnity insurance is going to be absolutely critical as pillar to that framework. And it's really important, if we're going to go down this path and establish the compensation scheme, that we're looking at both sides so we can actually have a viable scheme that's going to meet these requirements. Otherwise, there is potential for this to have gaps in the future as well.
Thanks, that's very helpful. You made some strong statements around the statement of ASIC about them not taking action on the basis of commercially flawed business models. And that's certainly part of the evidence that they have put forward here. But it seems that I'm just trying to work out if you've got a view on if that's their position, what it is that they would have and should have taken action on in these kinds of cases. Sometimes they've been marketed in a way that's not consistent with the commercially flawed business model, because, of course, the fact that it's a commercially risky business model hasn't been explained to the investor. Have you got any sense of those kinds of issues?
I think from reading the submissions, hearing the evidence and looking at past events and going back, we've seen a number of collapses in the past, including Trio, and that was where those comments were from ASIC's submission to that inquiry. Our concern is that if there is a regulatory gap that is existing, that is not meeting the community expectations, that needs to be addressed. We've heard and seen in their submissions and even in the previous evidence that if an individual is saying that there is a ASIC endorsed or administered license, there's an ASIC registered scheme, that does show a level of oversight and potential assessment, and it's being commercially operated. And if there's actually a gap in that framework that's actually supporting ASIC to potentially take action that is not meeting that community expectation, that is where we think some further inquiries need to be undertaken to understand how we can actually bridge that gap and actually demonstrate that community expectation is being met.
So in effect, in a scheme like Sterling and some others, the very fact that a product is registered with ASIC is used to lure in investors, despite the fact that, as ASIC says, they've got no commitment to taking action on the basis of commercially flawed business models.
Yeah,
So, sorry, Michael.
No, I was just sorry, Senator Pratt. I was just going to say, I think I mean, we can't comment on whether or not we're using that as a marketing tool or a promotional tool. However, there is definitely that community expectation that if you are seeing a scheme that's registered with ASIC and there is that perception that there is some sort of regulatory oversight over these products that are being marketed, and I think we think that's where the gap is in regulation meeting community expectations. The question is, does the reforms been put in place since, for example, the design distribution obligations and the ASIC product intervention powers, would they have prevented this from happening? We can't answer that, but the question needs to be asked. And also, if there is a community expectation that that if a product is registered, there is some sort of oversight, do we still need further reform to actually meet that expectation? And that's still the question we haven't seen answered.
What is your understanding of what they are regulating if they're not regulating this?
Yeah, I think when
in relation to managed investment scheme.
Looking at the requirements and the steps under the Corporations Act, I think there is an expectation from around registering as opposed to approving or assessment. And I think that's potentially where this mismatch is happening, in that there may be limitations in the ability of the regulator to have a level of scrutiny when they're looking to register a scheme, as opposed to what may be expected from the community, that registering a scheme actually equates to a level of assessment and oversight. So I think this is to Michael's point around the gap that we're potentially seeing that we need to look at. And, in addition to that, and to Michael's point, the product intervention powers coming through, target market determinations for some of these products, are they actually going to meet that community expectation and that level of protection, or is there still a gap that's going to exist that we, potentially we'll see future failures in this space as well?
In terms of registering or approving a scheme, what does it mean for a regulator to approve something? Are they merely registering it, or?
My understanding is that when they're looking at these requirements, it's more around administration and ensuring that all the requirements have been met. And if the requirements have been met, that they would be then compelled to register the scheme. The difference being that registration is outlined in the Corporations Act and what their requirements are, and that as a regulator, they are limited to those steps. That is where potentially we need to go back and look at, is there a step missing? Is there a level of oversight? If we've got these complex and very convoluted structures and other questionable, risk factors that may be coming through in schemes that cannot be considered as part of that registration process, then there is a case to actually say, then we need to look at this and how could we improve this process?
If I may add, sorry, Senator, if I may add, I understand the UK system is a merit-based system, so the regulator, there is some level of regulatory oversight as into the merits of a scheme or a product, and the question I think for government is whether there's an expectation that we should have a similar scheme here, and what does that mean for the operation of the regulator and resourcing, etc.
Okay, so in terms of registering a scheme, if you're not actually oversighting it, I'm not particularly clear on what the point of its registration is, particularly if, as you've highlighted, it is, Ms. Waller, exceptionally complex, as in this case. What is the point again of, and Senator Scar, you might be best placed to pick this up because I've not been a company secretary before. What is supposed to be the point of registering and approving a scheme, if not to be able to manage and have oversight of risks and ethics?
I think that goes back to the ally we were talking before. There is a threshold that when a scheme gets to a certain size that it must register, and that's where that trigger point comes through, as opposed to potentially a risk or, to Michael's point, a merit system. So that means that it's more about having that product on record, and there is definitely obligations that come with that. For example, they need to hold an Australian Financial Services licence that does require professional indemnity, and other things are demonstrated at application, not necessarily ongoing unless there's a level of surveillance. I think this is going back to our question that we're posing. If these measures in place are not actually meeting an expectation, and to the point that ASIC is being seen as the regulator and providing a level of comfort as a community, do we need to go back and actually unpack that further and see where this gap is? Notwithstanding, a lot of this legislation was put in place many, many years ago, and the systems and the complexity of products have continued to evolve. And I think that's something that we need to think about. Are we actually ensuring that our regulatory oversight and our legislative frameworks that we're actually setting these products up in are evolving and actually continuing to meet that or address the community expectations, but more so looking at these risk factors and ensuring that we're, demonstrating a level of trust and confidence in the market.
So there've been lots of reviews and even through parliamentary committees that have drawn attention to some of these issues that haven't been implemented. There have, however, now been some changes in terms of products having to be suitable for a particular target market. I'm not particularly familiar with those changes. Are they enough to get around to mitigate against ASIC not taking action on the basis of commercially flawed business models, or where do you see that overall picture?
I think there's two different focuses in that.
Question, Chair.
There's two different focuses there. One would be the target market determination. So if we're looking back at this product, for example, and in the last session, you're talking about some of the particular segments of the market that they were looking to demonstrate and market to. I think you could arguably say that would meet that requirement because they have identified who they're looking at and they're talking to those potential clients. I think the other side of that is then the oversight and the regulation. So there have been a lot of reviews and a lot of change in this sector, but what we're potentially not seeing is outcomes that are making some fundamental changes into how these products are actually operating and the risk that actually exists within some of these structures.
Thank you, Senator Pratt. Thank you, witnesses, for appearing before us today. There's a number of themes I'd like to tease out, flowing on from Senator Pratt's questions. This concept of community expectation, and I was reflecting on that. It seems to me that it's a case of community misperception, that the community actually at the moment, and I'm not saying this in a judgmental way, I'm just saying as a matter of fact, the community or a lot of the community doesn't appreciate under the current regulatory regime, and there's a question as to whether or not that should be changed, but the community doesn't understand the particular role that ASIC currently undertakes in accordance with the Corporations Act. So to some extent, the mismatch that you're referring to is really a mismatch between what ASIC actually does and what the community understands ASIC does. So it's actually a misperception on the part of the community as to the role ASIC currently performs under the current law. Would you agree with that characterisation?
I would say that, to your point exactly, that ASIC have to operate within the confines of their regulatory requirements. And at the moment, that does focus around a level of registration and administration. I think there is a question around the community understanding a number of things, including the complexity of financial products. We know not all of the individuals within the community will actually seek professional advice. Yeah. And unfortunately, even we saw in the last session that those who did, there was professional advice sought, and even the complexity of that product still proved challenges in terms of how that was seen. Going back to Mr. Davidson's point, does that warrant a review of the current expectations of the role of the regulator to understand and meet the community expectations around not just a level of registration and administration, but potentially a level of merit and oversight that goes a little bit further into those risk factors?
And so let's move to that issue in terms of the level of oversight. One of the concerns I have, and I am open-minded in relation to this, but one of the concerns I have with respect to the level of oversight is if you expect the regulator to be checking proposed management investment schemes to determine whether or not they're commercially flawed or too risky, in the event that a product goes through that process, it almost then is coming with an implicit, not guarantee, but approval or endorsement from the regulator. And I must say that on the face of it, that makes me somewhat apprehensive that the regulator then is undertaking that role, that responsibility of checking whether or not a financial product is or is not commercially flawed. Because if it goes through that process, then that's a really strong representation to people, potential customers, that this is a product they should invest in. Can you understand my concern in that respect?
Yes, definitely. And I think, there is never a 100% guarantee on any product or advice. And I think that's a fundamental thing that needs to be clear. I think that also goes to the role of financial literacy in helping the community more broadly understand some of the risk and return challenges that exist within the investment space. However, I think there is also an ability to look at, potentially some core risk factors that may be present and, may be common traits that we've seen across some of these collapses. I think it was in the response to TRIA that ASIC spoke about business models only going to be successful if they continue to have rising property markets, access to easy liquidity, and the other factor was about rising house prices, So if you're having a model that is only going to succeed if there is potential factors in there, when we know that those things will actually never continue in an economy, they could potentially raise questions around further scrutiny of that product and whether it's appropriate and should be commercially available.
But even if you limit it to those sort of aspects, and that in itself is a lengthy discussion as to what commercial red flags there should be, that in itself is going to require all sorts of analysis with respect to a particular scheme, whether or not there's, for example, hedges or some means by which risk is mitigated, the extent of the portfolio, whether or not the property portfolio is wide enough to mitigate the risk. There's quite a degree of analysis that would be required in order to undertake that task. And I would have thought you could also envisage that a potential promoter, and let's assume it's a promoter in good faith, who's done this before and has a reasonable track record, would be engaged in some sort of iterative process with the regulator to say, well, that's your view, but the contrary view is X. And as we all know, the higher the risk, the higher the potential return. And at the end of the day, we're making that clear to the investor that they're not investing in a bank account getting interest, they're investing in an investment product that has got higher risk, but it also has higher potential return. Do you appreciate how complicated that process could be in practice?
Absolutely. And I think that's one of the reasons we think a review would be warranted, because we could start to look at these potential different issues that you're raising, and then look at what potential measures could be in place to actually look at that risk reward and that resource trade-off to ensure that the measures are commensurate with the risk back to the community. Certainly cannot unpack all the complexity within these different areas today. And as I've highlighted, there's just a few factors that we've been talking about that we've seen in terms of common traits. But I think in terms of these risks in this sector, it has been an ongoing area, an ongoing issue. There is a breadth of investments that sit under MIS, and I absolutely respect that. But I think we need to question whether the regulatory settings are still appropriate in the current environment, given that we have had these settings for some time.
No, I agree with you. This needs consideration. One of the aspects that's...
Chair.
Oh, sorry, Senator Pratt.
No, I just wanted to draw to your attention that the investments, property investments, were highly concentrated in a particular area that, they weren't spread out investments, and equally some of the characters in it had just come out of the West Point property collapse as well.
Yeah.
Which
And
give some weight to needing some oversight on that. And I just wanted to ask if CPA was aware of that.
Of those particular factors in that circumstance, Senator Pratt? Yes, we had read that through submissions and through some of our background. And I think, as I was saying before, I think this goes to some of the things that could be explored as part of those regulatory settings to see what could be determined as potential risk factors to be considered. Going to the point that was made earlier, you're never going to be able to give an assurity from the regulator that products are fail-proof. But I think there is an ability for us to strengthen the measures and oversight that currently exist.
And I think Senator Pratt makes a very important point with respect to the background of some of the individuals involved. And it has come through submissions. And in fact, some of the participants I've spoken to outside of these proceedings who approach me, that if they had have known the background of some of the key actors in this financial tragedy, they would not have invested if they had known that. And that to me could potentially be an easier way to regulate in terms of increasing the standard to be considered by the regulator with respect to the history of the officers, the directors, and also shadow directors and promoters. So people who have influence in terms of the scheme, but who aren't held out as the actual directors. So they might be shareholders, have some sort of beneficial interest. That seems to me potentially an easier way, if I can use that term, to try and weed out problematic managed investment schemes, because there does seem to be repeated activity from individuals who have got a track record in this space. Is that a fair comment?
Yes, and there are reform. Oh, sorry, Michael.
Sorry, I was going to say, Chair, I think, yes, that is a fair comment. And I think, yes, schemes fail, and yes, people may have been involved in schemes that have previously failed. But if you are seeing the participants being having been involved previously in questionable schemes, then it should warrant a greater level of oversight to ensure that that they are suitable to be involved again, and a suitable level of oversight to ensure that scheme is operating appropriately.
Yeah, I think that's a good point. In terms of professional indemnity insurance, so I'm a Queensland senator. The Queensland context in terms of insurance has been very problematic for people to get property insurance cover, etc., against cyclone risk. People who are in bushfire potential areas have issues getting insurance. Isn't there potentially a similar problem in this space, that if you're a provider of professional indemnity insurance, there's a material difference between me extending insurance coverage to a tax practitioner who's been practicing in the area for 20 years, has never had a claim made against them, as opposed to extending the benefit of my insurance coverage to promoters of a managed investment scheme. And it just leads me to ponder whether or not how realistic it is that we're going to continue to be able to get the benefit of professional indemnity insurance on a widely accessible, affordable basis without material deductibles, et cetera, et cetera. Do you have any thoughts with respect to that? I understand where you're coming from. I'm just querying the commercial practicality of the space, which maybe is one of the reasons why we need a review.
Yeah, definitely. So you're absolutely right. In the insurance market across all sectors, we're seeing an increase in premiums and potential reductions in cover. Outside of the financial planning sector, for example, and in the professional accounting space, we're seeing a trend in increase, even though the risk in that space may not have significantly changed as may have in other sectors. And we know from talking to members and other licensees that the cost of professional indemnity insurance in the financial planning sector has increased significantly in recent years, even if there's been no claim or change in the risk profile of a practice, for example. And that would extend to product providers as well. I think our concern is that given it is a fundamental pillar of protection and it's a requirement of the Corporations Act, that we do need to understand what is happening in that market so we can understand what challenges may be coming and how we can continue to ensure there is a level of protection and compensation available should there be product failure or poor advice for a consumer.
And so that leads, I guess, to the compensation scheme of last resort. And if I can just raise a general philosophical point with respect to the notion of compensation schemes of last resort, and it's this, and I've been pondering this. If it seems implicit in the concept that the cost of that scheme is imposed broadly across the general economy and society, right? So if a scheme such as this failed, then the whole of society is required, either directly or indirectly, to subsidise the payment of compensation to those who chose to participate in a particular scheme. Now, from my perspective, that raises an issue of, well, if I'm not out there promoting this sort of scheme, which I think was toxic in the extreme, and I could not even imagine recommending investment into this sort of scheme where someone's living arrangements were dependent upon the return on investments. And I understand the issue as to how it was presented to people. But isn't it implicit in terms of a compensation scheme of last resort, even though I choose my financial advisory business, if I had one, my managed investment scheme business, if I had one, didn't choose to promote these sorts of products, isn't it implicit in a compensation scheme of last resort that ultimately I would bear some of the cost of someone else's failed scheme in order to ensure that the victims of that scheme receive compensation?
I think
I
the
think
same.
that's a really good. Sorry, I think that's a really good question. It's one we have asked ourselves over the many years we've had discussions around compensation schemes at various reviews. Yes, there is a level of moral hazard, and why should I or you as participant bear the cost of that? That's why it's really important that we have, I guess, you consider a continuum of consumer protection and access to recourse through that whole life cycle, so that we ensure that the products or advice they're receiving is sound. We ensure that if something does go awry, that there is appropriate course of recourse, for example, through PI, through internal dispute resolution, if not through schemes like AFCA. And then really we should only be getting, the compensation scheme should be the last resort and should only be accessed a minimal amount of times when all those other avenues have been exhausted. And our concern at the moment is that what we're seeing is we don't believe all those other avenues are exhausted before we get to this potential new scheme.
Yeah.
And hence the cost is going to be borne. There'll probably be a higher cost borne by the population of in the industry than should be.
So just teasing that out.
Yeah.
And the first point I want to make is, I know that term moral hazard's used in the context of the Sterling scheme. I view this as elderly, vulnerable Australians being taken advantage of through an extraordinarily complicated scheme, and where at a number of levels they were let down. That's how I view it. So I'm not seeking to impose any, and I know you're not either, Mr. Davison. I just want to make that clear. This is not a case where Senator Scarr decided to invest in a risky mining exploration company, and it didn't get a return on its investment. Now I'm looking for the government to compensate me. It doesn't fall into that category from my perspective. So I just want to make that clear. So then it seems to me that as you tease out the reasoning, that if you are going to introduce that scheme, then you want to make sure that the regulatory system is robust, and we should all have coming back to your point, community expectation that it is going to be a robust scheme, and people who've been involved in dodgy schemes in the past don't have any capacity to legitimately be promoting any scheme ever again, because we're all going to have to pay in the event they come up with a new scheme which fails again. Is that a reasonable comment?
I think it's a reasonable comment, and I also think it comes back to, if we do get to that point where the system has failed and we get to the last point where victims need compensation, the cost of that should be spread as widely across the industry and the sector as it can be to minimise the cost for everyone.
Okay, thank you. Those were my only questions. Senator Pratt, do you have any follow-up questions to conclude with these witnesses?
Well, I note, Senator Scarr, your questions on notice answers from ASIC have just come in, and I wondered if the CPA might actually have a look at that answer and make some observations.
Actually, that's a very good point, Senator Pratt. So just to give you some background, the concern I had in terms of the process was, or the questions I had in relation to the process was, if ASIC thought it needed to issue an interim stop order in relation to the PDS disclosure, and the disclosure was just so bad, so wanting, so misleading, then isn't that the point in time when the system should mobilise and say, if you promoters are issuing something which is so lacking in terms of key information, you should not be in the business of promoting any schemes. And we need to just protect the community against you, because either A, you don't have the capacity, or B, you're doing it recklessly or not caring or deliberately. So it would be very useful if CPA could look at that question on notice, the answer of which was, and we thank ASIC for coming back so quickly on it, to give your views with respect to how the system worked in that regard. And I think you will be genuinely staggered by the number of inadequacies in the PDS that were identified. And it does beg the question in my mind how, why this continued, why these promoters continued having been subject to the order which was issued by ASIC. So if you could take that on notice, just to review that and perhaps provide your further thoughts from a regulatory perspective, potential regulatory perspective as to whether or not what should have happened at that point in time, or what should happen, what the Corporations Act should provide happens at that point in time if such a finding is made with respect to a PDS. Does that appropriately summarise the question? We'd like the further information on, Senator Pratt.
Thank you, particularly in the context of how you can ask someone to correct a statement like that, while, you know, I think in effect ASIC was asking the PDS to make the fundamentally flawed business model more transparent. But I can't see how the two things can actually go together.
You almost get to the stage where the PDS should say,
Our business models.
you should not invest in this product, and these are the reasons why you shouldn't invest in the product. Here's 50 pages of disclosure. So you almost enter into those realms, which is somewhat curious.
Yes, and then they say they don't regulate for it. So I don't see how a product disclosure statement can be adequate in this case. And as exactly as Senator Scarr has said, unless it says, our marketing says you're offered a 15% return, but actually we will raid all your money if we don't reach that in order to pay your rent, which, you know, it didn't add up to me. And lastly, I wanted to take on notice anything that you're able to support the committee with in terms of amending the compensation scheme of last resort.
We'd be very happy to do that.
Your excellent evidence today.
Thank you.
Thank you.
Okay, thank you very much for joining us, and thanks for your evidence. It's greatly appreciated, and thank you for everything you do. And if we could have those answers as I'm just seeing when our 24 November 2021, so it's not too long, but we don't need war and peace. If we could just get your views, high-level views, that would really be very, very welcome. And thank you for your evidence today. Thanks very much.
Absolutely.
Thank you.
I now welcome representatives of the Financial Planning Association of Australia. Thank you for appearing before the committee today. I invite you to make a brief opening statement should you wish to do so. For the Hansard record, could you please state your name and the capacity in which you appear, please?
Thank you, Senator. My name is Ben Martian. I'm the Head of Policy at the Financial Planning Association.
It's good to see you again.
Thank you, Senator.
My name's Brad Vermeer. I'm a Government Relations Senior Manager at the FPA.
Excellent. Thank you very much. Do you have an opening statement?
I do. Thank you, Senator.
Thank you.
Thank you, Chair and Senators, for the opportunity to appear today before the committee for this inquiry into the collapse of the Sterling Income Trust. The FPA expresses its condolences to the victims of the Sterling Income Trust collapse and sympathise with the stories of loss shared before the committee today. Australian consumers should be able to trust the financial services sector to protect their hard-earned investments and look after their financial security, particularly through their retirements. They should not be taken advantage of for the financial gain of product manufacturers, and they should have faith that regulators are ensuring that only fit for purpose and quality products come to market. The FPA is not in a position to comment on the regulator's actions in relation to this matter, but we are concerned that these types of highly complex products continue to be marketed directly to consumers, putting their retirement savings at significant risk. This is why the FPA has been calling on improved product regulation and ASIC intervention powers over many decades. The FPA supports calls for investors to be appropriately compensated for the financial loss and damages caused by any wrongdoing in relation to the sterling products or any other financial product where the failure or loss is caused by mismanagement, fraudulent activity, or regulatory failure. For this reason, the FPA firstly believes that all financial products and services should be compelled to investigate and compensate for misconduct that may occur under their license through the new breach reporting and consumer compensation regimes. Unfortunately, in a large part, these are currently being restricted to only financial advice licensees. Secondly, this collapse demonstrates why the recently proposed compensation scheme of last resort must be extended to cover all financial products and services, not just distributors. Products as an industry must take a collective responsibility for protecting consumers. This collapse demonstrates that there is risk of unpaid determinations and consumer detriment flowing from product collapse, that there is involvement of other financial firms or their subsidiaries funding, distributing, and otherwise supporting managed investment schemes which aren't fit for consumer investment, and it is therefore an imperative for the Parliament to require the contribution to the scheme across the whole financial services value chain to support increased accountability for all participants, including MIS operators and products more broadly. The scheme should therefore be broad-based, require a fair share of contributions to be made from every financial services and products under AFCA's jurisdiction, and an independent umpire be appointed to ensure trust and fairness for contributors and consumers. The FPA acknowledges the government's recent commitment to consult on proposals to enhance the effectiveness of professional indemnity insurance in responding to the compensation claims. Having originally been recommended in 2012 by the St John Review, we have been consistent in our calls for this long overdue evaluation. Ensuring adequate insurance coverage for industry will assist significantly in protecting consumers and substantially reduce the calls on any established compensation scheme of last resort. Finally, the FPA recommends that laws around general advice provision be urgently amended to better protect consumers and make it clear that advice has not been provided, and better reflect that product information or strategy information is being provided. The general advice statement should also be amended to ensure consumers understand the risk of purchasing products without professional financial advice, and these statements should be mandatory at investment seminars like the one Sterling investors attended. Thank you, Chair, and we are happy to take any questions.
Thank you. I'll pass to you, Senator Pratt. I should just note that because of the arrangements of the hearing, we will need to conclude with these witnesses on the dot of 11:05. Okay?
Okay, I'll try and be speedy because your submission is excellent.
So over to you, Senator Pratt.
Thank you. Your submission talks about section 912EB of the Corporations Act to investigate reportable situations that might affect clients if there's reasonable ground to believe the client has suffered a loss. Can you tell us about how that the gap that you explain here has affected people in the case of the Sterling Income Trust?
So this is a section of the Corporations Act which was only recently introduced as part of the enhanced breach reporting recommendations that came out of the Hayne Royal Commission. But the requirements in that section are only obligate licensees who have an advice authorization on their license to investigate misconduct or financial losses and remediate consumers. Yeah. So what this effectively means in the case of Sterling is that the Sterling licensees could have, if they identified any breaches of the Corporations Act, they wouldn't have been required, if it was today, they wouldn't have been required to remediate the clients for any losses that they may have suffered.
So this is an improvement or not an improvement?
Well, this is, so 912EB, I guess, is an improvement from the fact that financial advice licensees, where they identify misconduct or loss, have to remediate clients, but it's only restricted to financial advice licensees, not financial products. So there's a gaping hole there.
And many of the people that invested in Sterling thought, oh, well, I can see reputable financial firms directing people into this investment. I'm just going to sign up without that advice because I'm going to follow their lead and not pay the overheads, if you like. Is that, why do people buy into products without financial advice? Is it because they perceive that it's reputable because good advisors have suggested it?
So I think the instances of good advisors recommending these types of products is very, very minimal.
Right.
And I think
Okay.
I think the problem
nub of it.
I think the problem is that, you know, these type of schemes are targeted through seminars, targeted through radio advertising. They're very complicated to understand. They've got complicated business structures behind them, but the seminars and the information that consumers are provided make them sound like all their dreams are coming true. And so there's not enough requirement for products to disclose the complexity and the risks of their products when they're in those kind of seminars.
And
this is part of.
If we force them to have adequate insurance in their own right, that would, I guess, force them to mitigate some of the risks embedded in those products in order to find insurance.
Yeah, absolutely. I can't speak for products, but I've had a lot of conversations with ASIC about professional indemnity insurance in financial advice specifically. And from the information ASIC's provided me, while they require you to attest you've got professional indemnity insurance in place, they never actually check whether or not it's fit for purpose, appropriate, meets the requirements to pay out compensation through IDR and EDR type schemes. So you've got a consumer protection mechanism that's sitting there that the regulator's required to ensure is in place, but they're not actually checking whether or not it's fit for purpose. And so my assumption would be that it's not dissimilar in the financial product space, and therefore you've got these products where investors think there's some security there because ASIC has registered the scheme. ASIC is regulating the licensees, and there's a requirement for consumer protection to be there, but there's nothing there ensuring that that's actually the case.
Indeed. In terms of your understanding why financial product providers are exempted from breach reporting in the Corporations Act, what's your understanding of that? And would breach reporting assist in giving early warnings of problems or only act as an additional cause of action after the event?
Sorry, so just to clarify, financial products are required to breach report to ASIC, and they are part of the new breach reporting regime. Section 912EB requires a financial planning licensee to investigate and remediate and compensate a consumer where there's a financial loss due to misconduct or a breach. That part of it is not extended to financial products. So they will identify a breach, but if there is a loss caused by that breach of the Corporations Act, there's no requirement for them to remediate the client.
Okay, so does that regime need to change in your view for these kinds of products?
That's our recommendation to this hearing, absolutely.
I've got so many questions to ask you. I just need to try and work out how to truncate them. I'll just ask these straightforward ones first. You've recommended AFCA as an independent umpire should not also oversee the purse strings. Who should manage such a fund if that's the case?
We had a view that ASIC should some way be involved as the as having oversight of the AFCA jurisdiction and the AFCA process. There should be some oversight by ASIC to ensure that AFCA's gone through a reasonable process of trying to get compensation for the consumer where the company has gone under, that they've become party to the liquidation process. At the moment, what can happen is AFCA can make a determination, effectively write letters and ask that the compensation is paid, but there's nothing to actually force AFCA to do anything to go after the firm to ensure that the compensation and just as importantly, AFCA's own costs are paid. And so you end up with a situation where AFCA can, and I'm not suggesting AFCA would do this, but AFCA could just sit there, do nothing for 12 months, then go to themselves and say, this compensation hasn't been paid. Can you pay it? And for our members, we would expect that there would be some form of attempt to try and support the consumer and try and get that compensation for the consumer where possible.
Okay, that makes clear sense to me. You've spoken about the responsibilities in producing and marketing complex and high-risk products. Would a mandatory warning about seeking independent advice from a financial planner be sufficient, or do you think that consumers kind of will go, well, I can see other people investing in this. They had a financial planner, so I'm going to ignore that warning.
So research shows, and ASIC's done this research, but there's been other bits of research as well, that when consumers go to a seminar or attend a talk or speak to someone directly about a financial product, they actually think they're getting personal advice, and the advice has considered whether or not that product's appropriate for them. Now, from the other side, the product that's providing general advice or information is operating under a regime where they know they're not providing personal advice and there's none of the personal advice protections sitting there, but they don't make that clear and apparent to the consumer because it's not in their interest to send somebody off to a financial planner who might suggest that the client, it's not in the best interest for the client to purchase that product or invest in that product. So the research is quite...
Yeah, no, please go on.
So the research is quite clear that consumers don't understand when they are or aren't getting personal advice, and that advice might and often isn't in their best interest.
As you've highlighted in terms of how some of these things are directly marketed, the statements about advice I think are also quite clear, but there's also the reality that people weren't given the product disclosure statements until after they had signed these contracts in some instances. How do you kind of see the regulator needs to have oversight if it's simply looking at the product disclosure statement and not dealing with the reality that that these companies selling these products created a portrayal that they will give financial advice and put the onus on their marketing material? Where do you think that leaves the regulator and their responsibilities? Because ASIC said they simply have responsibility for the product disclosure statement rather than the overall way in which consumers are pulled into this product.
I can't I mean, I can't speak for the process that ASIC went through or the way they regulate these products. But what I would say is that there is a consistent nature to these types of products losing significant amounts of investors' hard-earned money and particularly retirement savings, that would suggest that there are metrics that ASIC could look at which would say certain types of products are more likely to fail, and we need to have closer looks at those licensees, and we need to have closer looks at those specific products. This is not the first property type investment scheme that has failed in my short history in financial services. So, you know, it's a concern that these types of products and these types of people are able to continuously create new products, continuously take clients' money, and then continuously leave clients with nothing left.
Do you have any insight into the tools, that regulatory powers and tools that ASIC should or could have used at the time of these collapses? I don't necessarily expect you to, but I'd be interested in your perception.
I think, I think reflecting on my understanding of the way ASIC operates and the conversations we've had. So I mentioned earlier in terms of professional indemnity insurance and the conversation we've had with ASIC. ASIC collects a lot of information from financial services firms and licensees. Whether or not it actually looks at any of it or considers the risks or takes proactive action based on the information they collect would be the question I would ask, given the conversations we've had.
What's your understanding of the point of collecting that information?
I mean, to be blunt, it's ticking a box. The law requires you to provide a particular piece of information. Tick, it's been provided. There's no consideration of what the answer is. There's no consideration of if the answer would lead to a higher risk weighting for that particular product or that particular licensee or that particular scheme. If all you're doing is ticking boxes and not looking at the answers, then this is the outcome that occurs.
And ASIC said in its submission that consistent with the economic philosophy underlying the FSR regime, we don't take action based on commercially flawed business models. A significant feature of a number of collapses leading to investor losses is flawed business models. That is, models that would only prosper if asset prices continue to rise and debt markets remained open and liquid. Responsibility for flawed business models lies with the management and the board. What do you make of that statement?
So firstly, for us, it demonstrates the benefit of a relationship with a professional financial planner in helping clients understand the risks of these type of products. But in terms of the regulator and the way they're regulating, similar to my colleagues from CPA's statement, consumers expect when a product is regulated by the regulator that there is some form of check or some form of quality assessment that it's fit for purpose for a consumer to invest in. If that's not the case, which is becoming apparent, then I think the disclosures in PDSs and the disclosures in target market determinations and disclosures more broadly around financial products need to be significantly boosted to make it very, very clear that despite the fact that this is a product from a licensed organisation, despite the fact that the scheme has been registered with ASIC, nobody's actually checked to see whether or not it's fit for purpose for a consumer.
Yeah, that's a good way of looking at it, because essentially the PDS in this case should have been essentially amended to say or they've been marketed as having a 15% return. In order for ASIC to say that the PDS is adequate, it needed to say we can't guarantee this level of return, and yet it didn't. You still have to assess the business model underlying it, surely, in order to have an accurate product disclosure statement.
Yeah, I mean, I've got a lot of sympathy for ASIC in terms of that. I mean, there are hundreds of thousands of products on the Australian market, and having to, you know, if ASIC's job was to consider whether or not the underlying business case for each of them was appropriate, that's a virtually impossible task. But again, there are certain types of products that tend to lead to these kind of losses. It's not the balance fund at a superannuation fund. It's not, an indexed share fund. It is a highly leveraged property investment scheme that is sold through advertising and seminars. And I would have thought those risks would have been appreciated by ASIC, and maybe they have closer looks at those types of products.
Thank you, Chair.
Thank you, Senator Pratt. So, Senator Pratt, you've got no further questions for these witnesses?
They're excellent witnesses. I could keep asking questions, but I thought I should give you an opportunity. I'm happy to keep going.
Okay. Well, I will ask some questions. If I could just ask the witnesses first, did you hear I think you did hear the testimony from the CPA and the questions I asked the CPA in that regard. So I'll start with this issue of professional indemnity insurance, and that is, I think the term was used, how important it is to ensure that relevant players in this space have adequate professional indemnity insurance. But that is dependent upon the market for professional indemnity insurance, isn't it? So there's only so much the government can do to ensure that there is professional indemnity insurance. And then you've got a complicated question about, well, what's a reasonable level of deductible, for example, in relation to professional indemnity insurance. So I'm interested in your comments with respect to the commercial realities of trying to access professional indemnity insurance when ultimately the providers of that insurance have got their own business model, which they're considering in terms of the economics of providing the insurance.
Yeah, absolutely, and you're absolutely right that it's a commercial product, and insurers will decide whether or not they insure risk in Australia, and what type of risks and products they bring to market. Part of our concern, though, is number one, ASIC. The last time ASIC did a review of professional indemnity insurance in financial planning, for example, it was 4 or 5 years ago, and the statement, and at the time our members were telling us they were starting to have a lot of problems getting insurance, but ASIC's report says there was nothing to see here. There was no problems with the professional indemnity insurance market. All licensees that were attesting that they were able to obtain a professional indemnity insurance, but there was no consideration of whether or not any of that professional indemnity insurance was fit for purpose and adequate for the risks of those businesses. Since then, the market has significantly deteriorated. Our members are telling us that there's only 2 PI insurers currently in the financial advice sector. One of those is a closed book, so if you've got cover with them, you can't change it, you can't move it, you can't add to it. It is what it is. The other one has got a very small book, and at the moment it is extremely difficult to get cover. That suggests that there is a regulatory concern about whether or not there is actually a healthy and viable PI market in the country. Now, anecdotally, in conversation I had with ASIC, they tell us they know that there's a problem with PI, but we're not seeing any action in terms of that, which is again why the FPA has been calling for a review of PI and the framework around PI. We've also approached the Insurance Council to try and get their assistance in particularly in the financial advice market. As I said, I can't speak for products, but if we're having so much trouble in financial advice, I can only assume that there are problems in products as well.
Right, okay. You would have heard the question we asked the CPA to take on notice with respect to the response that ASIC gave to a question I put on notice, which was to provide details with respect to the inadequacies that were identified in the Sterling PDS prior to the issue of the interim stop order. And that answer to the question on notice has been provided. And I note that the statement of concerns which ASIC issued was, and I'm just counting the pages, is about 15 pages long. So that immediately raises a concern in my mind with respect to the regulation in this space. And as you rightly observed, we need to be fair with ASIC in this respect. They have a regulatory regime to administer as the regulator, and that needs to be taken into account. But one of the issues which arises in my mind is in circumstances where the regulator is compelled, after going through a process, to issue 15 pages of concerns with respect to a PDS dealing with everything from risk to conflicts of interest to inadequacy in terms of providing the background of the directors and management, etc., etc. That, in my mind, raises the issue as to whether or not the promoters, the responsible entity, should have been permitted by the system, if you like, to amend the PDS and then continue with the scheme, as opposed to the scheme coming to an end because the disclosure was just so materially inadequate that this took this case into the realms of something that just needed to be stopped, as opposed to disclosure corrected in certain aspects to ensure that there was more fulsome disclosure. I'm interested in your views with respect to that concept, but feel free to also take the question on notice and provide observations after you've had the opportunity to read the statement of concerns.
Thank you,
Do you have
Senator.
any preliminary views on that yet?
Yeah, so broadly, this is why we were calling for decades for the product intervention powers and the direction powers that ASIC have now been given to intervene into these types of products when they identify that there are a significant risk to consumers and shut them down as quickly as possible.
But that sorry to interrupt, we're coming up against a hard deadline, but I just want to tease that out because ASIC has provided us a review of the product intervention power, and they have to come to certain views with respect to the product prior to intervening. But it seems to me that in terms of intervention, in terms of what may happen in terms of product intervention, a key consideration or a key trigger for intervention may well be not just, and I'll quote, where a product has resulted in or will or is likely to result in significant consumer detriment, but perhaps also where the disclosure in relation to the product has been materially inadequate and is unable to be remedied without causing substantial prejudice to everyone who previously had invested in the product before the disclosure was modified. Do you have any views with respect to that?
We'd absolutely agree with that, and I think in the process of the consultations around the product intervention powers and direction powers, we thought they could have been strengthened further in our submissions. I'd make the point, and I appreciate the time restriction here. Recently, we've had the design and distribution obligations commence and target market determination framework start. Frankly, the quality of virtually all of the target market determinations in defining who the target market for the products are, providing relevant information to consumers so they can understand whether or not they fit in those target markets or don't fit in those target markets, are absolutely woeful.
And at that point, Senator, the readability for it, particularly in these cases for consumers who are not receiving advice, I mean, and as an average, a reasonable person who doesn't have a background in financial services to determine whether you're actually in the target market for this, for a particular product is almost impossible. And if these documents were drafted in order for consumers to be more aware of the products that they're actually investing in without actually having to obtain personal advice, I think they have not hit the mark on that at any point. So that's something I think that also needs to be further looked into, particularly by the regulator, to ensure that they're actually fit for purpose.
Because I look at this statement of concerns, and I'm very interested in your view on it, but I've been involved in the preparation of prospectuses, offering documents in the capital market space, as a company secretary of an ASX listed public company, and it is just woeful. And to me, it just raises the question whether or not the people involved in this scheme should ever be involved in another scheme ever again, on the basis of how woeful the PDS was. And sorry, go on.
I was just going to say, I mean, we can't speak for the actions of the regulator or how they investigated this issue, but we started to have a look at the company structures and who were involved, and we spent a couple of days trying to figure it all out, and the web of this in trying to prepare our response, and we just had to give up on it because it was so complicated.
Yeah,
that has to be a red flag
to the regulator.
In terms of saying this is not a fit product for consumers.
Okay, well we'll have to leave it there. I've come up against my our hard deadline, Senator Pratt. So thank you for your evidence. The date for answers to questions on notice is 24 November. So if you could have a look at that statement of concerns, very interested in any observations you have. And the hearing is now suspended until 1:45 p.m. Thank you very much.
Thank you, Senators.
Thank you, Senators.
It's good to go. So we're good to go. And so the hearing is recommenced, and I now welcome representatives from the Australian Financial Complaints Authority. Thank you for appearing before the committee today. I remind officials that the Senate has resolved that an officer of a department of the Commonwealth or of a state or territory shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions on matters of policy and does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as contempt. It is also contempt to give false or misleading evidence to a committee. If a witness objects to answering a question, the witness should state the ground upon which the objection is taken, and the committee will determine whether it will insist on an answer. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. Such a request may also be made at any other time. I invite the witnesses to make a brief opening statement, should you wish to do so. And for the Hansard record, could you please state your name and the capacity in which you appear, please?
Well, thank you, Senator. We'll do introductions and then I'll do a very quick opening statement, if that's okay. So my name is Justin Untersteiner. I'm the Chief Operating Officer at the Australian Financial Complaints Authority, AFCA.
Yes, good afternoon, Senators. My name is Roseanne Rose. I'm the Senior Legal Manager at AFCA.
And thank you for the opportunity to appear today. We do welcome the opportunity to provide evidence to the committee today. As I mentioned, my name is Justin Untersteiner. I'm the Chief Operating Officer, and you've just met my colleague Roseanne Rose as well. As you may be aware, AFCA is an industry ombudsman scheme. So we provide independent external dispute resolution services to consumers and to small businesses who are in dispute with their financial firm. We're not part of government. We are a not-for-profit organisation that's limited by guarantee, and we are funded by the industry. Our role is to help parties to resolve their complaints. We are impartial, so we do not act or advocate for either party. If a complaint does not resolve between the parties once it comes to us, we will decide on an appropriate outcome. And it's important to note that only 7% of matters that go through such a decision stage, there are only 7% of our complaints make it to a decision-making stage. The vast majority are resolved between the parties through our processes. And pleasingly, 90% of all complaints we received in the last 12 months were resolved within 6 months. So this result demonstrates that AFCA is achieving its purpose in being faster and cheaper for consumers and firms compared to an alternative such as a court or tribunal. AFCA was established on the 1st of November 2018 following a government commission review into external dispute resolution in the financial services sector, and we replaced 3 previous predecessor schemes: the Financial Ombudsman Service, the Credit Investments Ombudsman, and the Superannuation Complaints Tribunal. The majority of financial firms with an Australian financial services or credit licence are required to be members of AFCA, as well as authorised credit representatives. And some financial firms that are currently not required by law to be members are members as well, because they see the value in the service that we provide. And as a result, we have over 40,000 members of our service across the sector. We handle complaints across 60 different product types, and the disputes range from sometimes more straightforward disputes such as credit listing issues through to highly complex banking, life insurance, superannuation and investment and advice matters, such as the matters we'll be discussing with you today. We've had a very high uptake of our services since we commenced. We've received over 220,000 complaints since we opened our doors in 2018. And in the last financial year, we received just over 70,000 complaints in 1 year and closed 75,000. We apply the laws that are set by Parliament and the regulatory guidance issued by the regulators. We work closely with Treasury and financial regulators to ensure alignment, because we know that all parties need to understand how we will handle particular types of matters when they come to us. It's not our role to create policy nor to develop the law or standards. We make decisions with regard to the law industry codes as they stand at the time of the conduct which has been complained about. We're also bound by our own rules, which sets out our jurisdiction and our approach to dealing with complaints. We're appearing today in the context of the committee's inquiry into the Sterling Income Trust. And one of the committee's terms of reference relates to access to justice and redress, which relates to AFCA's role as the single external dispute resolution scheme in the financial services sector. We understand that the collapse of the Sterling Group has had a devastating effect on those consumers who have been impacted by the failure. We've been working with those consumers now for some time. We've seen vulnerable Australians who have experienced significant financial stress and pressure, who are at risk of losing their savings, who have or are about to lose their homes, their security and their financial independence. And we are terribly sorry to see that this has happened. I should call out that AFCA is not a regulator, so we are limited in terms of information we can provide around the structure of the group, but we do understand that ASIC appeared yesterday on Tuesday and will be appearing again today to help answer those questions. So our role in this matter has been limited to the consideration of complaints received by Sterling Group consumers about the conduct of our members. And so in this case, we've received complaints against 2 of our members. That's Theatre Asset Management, as well as who are now in liquidation, as well as Libertas Financial Planning. What we do know is the complaints that we've received so far are extremely complex. They involve several entities and authorised representatives. We have issued 2 binding determinations in relation to Theatre and 1 against Libertas. We currently have 146 open complaints against Theatre, all of which are currently paused because Theatre is in liquidation and pending the outcome of the scope of the compensation scheme of last resort. The complaints against Theatre predominantly relate to the dealings in the Sterling Income Trust. We have 14 open complaints against Libertas. I note, however, that these complaints have been impacted by the judgment handed down by the New South Wales Supreme Court regarding the DH Flinders matter. And in light of this judgment, we've been reviewing our jurisdiction to consider complaints lodged before the 13th of January 2021, and this includes complaints against Libertas. We've recently notified complainants where we have formed a view that AFCA does not believe it has jurisdiction to deal with their complaints as a result of that decision. Complaints lodged after the 13th of January onwards are not affected, as our rules have since been amended. We do thank the opportunity to appear today, and both Roseanne and myself are happy to take any questions from here.
Just in relation to that, and I'll pass to you, Senator Pratt. I just want to ask one question immediately flowing from the opening statement, where a distinction is drawn between complaints lodged prior to the relevant date in January 2020 and complaints lodged after. Is it possible for someone who lodged a complaint prior to 13 January 2020 just to resubmit the same complaint after 13 January 2020?
Yeah, no, it's not possible. Built within our rules is detail which outlines that that's not possible. So the complaint will be considered based on the date that it was lodged. And so even if it's closed and relodged, we'll go back to the original date that the first complaint was lodged, not the new date.
Okay.
Yeah.
All right. I understand. Senator Pratt, you have the call.
Thank you very much. Thank you to AFCA for appearing. In terms of the DH Flinders decision, how is it possible to provide financial advice but not have a relevant insurance product to cover it?
Sorry, Senator. So I might get a bit of clarification on your question. So, and it was just cutting in on.
My understanding is that the decision in DH Flinders, and correct me if I'm wrong, was based around advisors advising on products. Is it Libertas hadn't actually given their advisors a mandate to sell or to advise on?
Yeah. So I'm happy to provide some context on that, if that's helpful. So, the decision of DH Flinders was decided in the New South Wales Supreme Court in November 2020, and it was a challenge of and a successful challenge of a discrete part of our jurisdiction. And so the question for the court was whether AFCA had jurisdiction to consider a complaint against a licensee and therefore a member, and in this case, DH Flinders, that related though to the conduct of one of their authorised representatives, but where the authorised representative was acting without or outside of the scope of that authorisation. Okay, and now I guess if I just step back a little bit to give a bit more sort of flavour to that. When a member becomes a member of AFCA, we enter into a contractual arrangement. That's how we work. Again, we're not government. We don't set laws. We enter into a contractual arrangement, and our members are to abide by our rules at the time that the complaint is received. It's a contractual arrangement, and so our rules are important because they're binding in that contractual arrangement. Our rules are typically consistent with the Corporations Act and other laws. Right, for certainty, that makes sense, and that's what we've always done. It was always the view that this discrete piece of jurisdiction was absolutely consistent with the Corporations Act, right? And the Corporations Act will place liability on the licensee for the conduct of their authorised representative, even if they acted outside of scope. So even if they're doing something that they're never authorised to do, the liability still sits with the licensee. Right. And so it was always our view that that was the same for our jurisdiction. Unfortunately, the court read that our rule down quite narrowly and determined that we didn't have jurisdiction. And as a result, ASIC intervened very quickly and our rules have been amended, which is, I think, appropriate. What we saw in this situation, if I look at the Libertas complaints, is that Libertas had provided their several authorised representatives authorisation to deal in and to provide general advice around the Sterling Income Trusts, but they hadn't provided that same authority to deal in the Silverlink preference shares. And so what the complaint related to in Libertas was a complaint around general advice towards the Silverlink preference shares, which was authority never provided by Libertas, right? And so that's the issue that we have around the jurisdiction there, is that if you, flowing on from the DH Flinders, we've formed a view that those cases will not be in our jurisdiction. Now, in saying that, we've written back to those consumers, and those consumers have a right to object, and we're still considering that. So that's still on foot, though, that they aren't finalised. And there are a few complaints too where there was some investment in Silverlink preference shares and some investment in Sterling Income Trust. So there are a few of those complaints where we're saying they're partially in jurisdiction and partially out. But that's really the impact that the DH Flinders decision has had on our jurisdiction.
Did Libertas make money from the sale or commissions or whatever in relation to advice around Silverlink?
I might pass to my colleague. Did you have a view on that, Rose?
That's not been the subject of any investigation or finding in respect of the complaints that we've looked at. We've looked at our jurisdiction firstly and decided that we don't have jurisdiction, so haven't investigated beyond.
It may be, Senator, it may be a question for ASIC though, that you may have some further information about how that arrangement worked between the licensee and the authorised representative.
How was the principle of whether something was advised on without authorisation? How was that determination made, particularly if sold by, was it one advisor doing this to multiple people, or was it more than one advisor within referring to Silverlink?
Yes. So in respect of Libertas, there was a corporate authorised agreement with Sterling Corporate Services. There was also authorised representative was Mark McKeon. So they were the two authorised representatives in respect of the complaints that have come to us to this point.
And how is that different in terms of the other product?
So the Silverlink product instead of the Sterling Income Trust?
Yeah.
Yeah. So both Libertas and Theatre had provided authorisation for Sterling Corporate Services as an entity, as well as the individual mentioned, to deal in and to provide general advice in relation to the Sterling Income Trust, but they never provided that same authority in relation to the Silverlink preference shares. And so that was the key issue for us.
I don't quite understand the difference at a technical level. You're saying it was just one advisor that was providing that advice around Silverlink. Was Libertas aware that Silverlink was being sold by its advisors?
I don't know if you have a view on that, Rose.
Yes, we do understand that they were aware, but from a jurisdiction perspective, we are limited in terms of that conduct because the authorisation to the authorised representatives was not in respect of the Silverlink preference shares. Because of DH Flinders, that is not conduct that we have jurisdiction to look into.
What I can say though, Senator...
I don't understand it, but anyway, I don't know if you're able to understand that difference, Senator Scarr.
Can I, if with your consent, Senator Pratt, if I can just ask a few more questions around that. So the whole concept of authority in the usual context of someone having authority to act in a particular way there's a number of aspects to it from my perspective. First, there's the strict black letter interpretation of authority, which appears to have been the interpretation given by the judge in the case. And I haven't read the judgment, but that seems to have been the interpretation. But then you have the grey area around ostensible authority. So if someone is dealing with someone else and it appears reasonable for the person who they're dealing with to assume that they've got authority, particularly in circumstances where I think it was mentioned that the relevant firm was aware that they were potentially providing advice in relation to these products. That triggers, in my mind, issues of ostensible authority and whether or not jurisdiction could have been established on those grounds. Was that something that was ventilated in the court in terms of its considerations?
For the purposes of the court judgment, yes, that was ventilated, but that's a separate consideration to how we put that lens then on the Libertas cases. And certainly in respect of the investigations that we've done to date, there was no authorisation in respect of the Silverlink preference shares, so that is clear from the authorised representative agreement. And we have not found any evidence otherwise to demonstrate that Libertas had provided actual, apparent or ostensible authority, which is built into our definition of financial firm for the authorised representatives in respect of Silverlink.
And okay, so I understand that, and I'm not seeking to prosecute the case in this forum. That's not appropriate. But perhaps I'm going to get into that area somewhat anyway, because and you will note that this comes from a place where we're concerned about the victims.
Yes.
And can I put it to you that if one were to take a helicopter view of the commercial effect of the transaction and what it was intended to do from a helicopter view, the Silverlink transaction was really a workaround to achieve the same commercial effect as the original form of transaction. Which is that something that's been considered? Because from an outsider looking in, one could say, and I think this is potentially where Senator Pratt was going. If one takes that helicopter view and looks at the commercial practicality of what was being done, this is a distinction without great moment, especially when one considers it from the perspective of the victims, that essentially a commercial workaround had been evolved by the promoters, but from the perspective of the victim, they were still looking to end with to secure their retirement in the long term under a lease, and it didn't really matter if it was done under the Silverlink model or any other model. Do you have a response to that observation?
Can I start? Look, the first thing I would say is I think without knowing exactly the intentions of that provision within the Corporations Act as it was introduced, I would suggest that's one of the reasons why the provision in the Corporations Act is the way it is, right? It is to make sure that there is an authority, that there is a liability that's placed on the licensee, regardless of whether it's within or without side of the authority for these kind of arrangements, right? That's how the Corporations Act applies here. If you were to take the same issue to court, it would be a different outcome, right? And that's why we certainly had a long-standing view, and as I understand it, I think ASIC were on the same view as us as well, that that's exactly how our rules applied to avoid exactly what you're suggesting. You know, a helicopter view, and I can't talk to this because we haven't investigated the structure, but on the surface, it certainly looks like that it was a workaround because of the stop orders that were put in place on the PDS for the SIT, right? And so that's certainly what it looks like, and that's how our rules have always been interpreted to apply for that reason. And that's why it was so unfortunate, and I will say that the rule was read down so narrowly in that judgment. And unfortunately for us, we have explored all avenues here. We've sought legal, external legal advice. We've done everything we can to understand and make sure we understand where our limits are. And unfortunately, the position that we find ourselves in is we don't have jurisdiction to deal with these matters. Even if that was the intention, we don't have jurisdiction. Did you want to add to that?
And hence why as well, ASIC directed us to change the AFCA rules to make explicit provision to mirror the provisions of the Corporations Act, that in fact a financial firm includes the actions of their representative acting within or outside their authority. So they are the rules that we have in place now since 13 January. But because of the judgment, and unfortunately for those complainants in respect of Libertas who lodged prior to 13 January, we are caught by that.
And there's probably two other things I would add to that. One is we did issue a determination against Libertas in relation to the Silverlink preference shares before the DH Flinders judgment, and it was accepted and it was paid, so it's stayed in. And our finding was exactly that the liability was placed on Libertas for the conduct of their authorised representative for the dealing in or the general advice in the Silverlink shares. The second thing I'd mention, and this might be expected, but we did seek permission from Libertas to still allow us to consider these complaints as we thought it was the right thing to do. However, they've rejected that request.
And is that, was that request, the rejection of that request by Libertas, was that in writing? Is that a public document? Is that a document which has been published?
It hasn't been published, no. It's correspondence between Libertas, all their legal representatives, and ourselves.
Can I put on notice a request from this committee that you provide that correspondence, the exchange of correspondence between AFCA and Libertas and or their lawyer with respect to the request that was made of Libertas for the jurisdiction of AFCA to apply, as was expected from AFCA's point of view, and to provide their response to that, to this committee, please?
Sure, we will certainly take that on notice. Thank you, Senator.
Okay. So really the nub of this is, without Libertas consenting to the application of the jurisdiction to the jurisdiction, your hands are tied, and you can't go back in time and seek to apply your jurisdiction in the way that it's now applied. Is that correct?
That's exactly right. Yes.
All right, I understand. Senator Pratt, I'll give you a call back.
Thank you. Who caused you to pause complaints in relation to Sterling and all the associated entities, and why?
Yeah, sure. So if I step back again for context purposes, the long-standing practice of predecessor schemes as well as AFCA when we commenced was that we would not accept complaints that related to an insolvent firm. And the reason for that is, well, there are several reasons. The first is obviously the complaint is between AFCA and the financial firm, and we now don't have a financial firm in place because they've become insolvent. That there is particularly these kind of complex cases, there is a huge amount of work and investigation that goes into them. I mean, if you look at these matters, they turn to factual, both legal and factual issues. Significant investigations go into them, and so we did not see benefit in putting a consumer through that process for, it could be a year or a year and a half, as well as our organisation, when we know that there's nothing at the other end, right? There's nothing to come out of that. And so the long-standing practice was that we just would not deal with them. Now that we changed that policy on a temporary basis because of the announcement of the compensation scheme of last resort. And so as a result, to provide support to the CSLR, we made a decision which we would accept complaints against insolvent firms that were within what we thought the time period would be for the CSLR, which was from 1 November 2018, and we would actively work on those cases. We started that process for a limited period of time. The government then made an announcement that because of the pandemic and everything else going on, that it would pause the work on the CSLR temporarily. And so at that point, we made a decision. And so when you say who made the decision, the board of AFCA, the independent board of AFCA made the decision, which was we would pause the managing those complaints until we had certainty over the scope of the CSLR. And so the idea is once the legislation or the bill is passed and the legislation's in force, we can then review our pause complaints against the scope of the CSLR. And if we believe that those cases would be prima facie in scope of the CSLR, we would reactivate them and commence work. And so as a result, the majority of the theatre complaints were paused. We did have two what we call lead cases where the determinations issued before that point. And I say lead cases because we pause these cases. The challenge for us is we haven't investigated them, so I can't tell you exactly what's happened in each of those 146 cases. I can't, but we do have a view that at least one of the cases that we issued a determination is probably representative of many of the other cases. And that case is in relation to, it's not a pure investor, it was a leaseholder and investor, right? So a Sterling New Life lease investor. And so we issued that determination that was in favour of the consumer.
Can I ask, what is the adequacy and the applicability of insurance products to cover insolvent financial advice firms and or managed investment schemes?
Look, I think we don't have a particular policy view on PI generally, but what I can talk to is certainly, look, a question, and I believe it came up in your hearings on Tuesday. I did see this as, well, why couldn't AFCA issue determinations that could then be put to the PI, right? So I did see that. And we are aware that one consumer has successfully made a claim with the insurer, even though there was a high excess, I understand, involved, there still was. Look, at a general, so from a general perspective, our experience has been that obviously PI is not an avenue for consumer redress. It's a business risk policy. And so that's the primary purpose to begin with. So, you know, consumers will not have direct contact with the PI. They'll have to work through a liquidator anyway. What we've seen, though, is huge variation. So, you know, there are all sorts of challenges there. So things such as what is actually covered in the insurance, that it can vary. And so often these kind of matters will not be covered anyway. There are often pools. Now, I don't know what the pool is here, but we've heard some figures thrown around, which would suggest the pool isn't huge. So even if you had determinations for, say, those 146 complaints, it doesn't for a second mean that there would be enough money within the insurance pool to deal with those. There are so many different issues that we've experienced that, the policy position is that we won't deal with complaints while they're insolvent. Now, in saying that, we are not the only vehicle to get to an insurer anyway. A consumer can lodge a proof of debt with the liquidator. And in fact, we have worked with consumer legal support services in WA, and we placed this information some time back on our website that allows consumers that have been impacted by this matter to contact those consumer groups to get support to lodge their proof of debt through the liquidator. And again, that's the common vehicle that you'd use to try and seek access through the PIs, through the liquidator.
Do you know what is in these insurance policies when you're making a determination? How does the ability fall in terms of on the insurance or the self-funded scheme?
We don't have any access. So we have not been able to get any access to any information about the insurance, not even to the point of understanding who the insurer is. So the closest we've come to any information around the PI was a conversation that we had with Worrells, the liquidator, and again, and it's common. We generally speaking, we will not get access to any information about the PI.
Okay, so when in a non-insolvent company, if you've got something that someone brings a complaint to AFCA for, and it's paid out in that self-funding, does that liability go back straight back to the company that's caused the wrongdoing? They may or may not pay it from their insurance. Is it pooled funding? How does it work?
So, in the role that we play, so we will, if we consider a complaint, it goes all the way to determination, which is where we have an independent ombudsman look at it. Again, that's about 7% of our complaints. And if through that we identify that there was false or a breach of law of the financial firm and we award compensation, we'll issue a binding determination, and that financial firm has 30 days to pay that. Right now, what happens there, I couldn't tell you, but I would suggest that in many cases it's paid for out of the financial firm's own operating account.
Yeah.
But in some cases they may make a claim to their insurer, depending on the level of cover that they have and what the cover is for. And anecdotally, what we understand is every insurance policy could be different, and so it depends on the cover. And so I would suspect that in some cases there are members of ours who are paying that claim through their insurer. But again, that's not something that we have visibility of. What we are focused on is if a consumer comes back to us and says they haven't complied with the determination, we would then report that to ASIC.
Okay. And in the case of Sterling, when you're not responsible for the underlying fundamentals of the company, it's not necessarily, it in effect operated as a Ponzi scheme, chewing up everybody's cash to cover the fact that it didn't have the underlying income or assets. It's inevitably going to become insolvent before you discover kind of underlying inability to meet a consumer's and investors' needs.
Yeah, I mean,
How do you address that from your own licensing point of view, particularly if ASIC's not says it's not their job to look at a flawed business model?
Yeah, I mean, the challenge Senator, that we do face is that in a way we're almost the last step process. If you use this as an example, by the time we started receiving complaints, I mean, one of the roles that we play is not just the dealing with an individual complaint, but it's actually to report what we refer as systemic issue to the regulator. And that could be to ASIC, or it could be to APRA, or it could be to the ATO, for instance. And so that what a systemic issue is where we see an issue that could be impacting more than one consumer, right? And so that we would bring that to the attention of the regulator to investigate. By the time we started to receive complaints about theatre, the regulator was already aware, right? So we were, by that stage, I think the wheels were already in motion to wind up, well, they were close to going to voluntary administration by that stage. And in fact, the bulk of the complaints that we received against theatre were actually after they'd already gone into voluntary administration, but before they were in liquidation. And so again, from our end, because of what our role is in the system, is to deal with the complaints when they come to us, we are really at the end of that process. Now saying that, and I know it doesn't help these consumers, and I understand that, but the reality is the vast majority of our complaints aren't against insolvent firms, and we are able to deal with the vast majority of our complaints. I mentioned the statistic before, we've been able to support 220,000 consumers. Unfortunately, though, this is a situation where we can be limited.
You change your rules upon the request of ASIC, and you negotiate that with your... How does Parliament oversight in changing your rules?
Sure.
If we wanted to fix this problem now and on, like there's been a lot of debate about the CSLR the CPA, even the financial advisors are saying it needs to cover managed investment schemes.
So I guess I'll tackle that from two angles. If I talk about the compensation scheme of last resort first, and then I'll talk a little bit more about the oversight and the changing of our rules. It's two distinct issues. So the compensation scheme of last resort, as it stands with the current draft bill, relies on a determination from AFCA that fits within the scope of the compensation scheme of last resort. And so if that's the case, that determination would then be provided to what will be separate entities to us, a subsidiary called Compensation Scheme of Last Resort Company or something like that, would go there for assessment. And if it fits the criteria, it can then be paid out. And so at this stage, as it stands, managed investment schemes are not in scope of the Compensation Scheme of Last Resort, and therefore there wouldn't be determinations because we wouldn't be issuing determinations, right? Because they're not in scope. Now, just
for example, but there are other kind of insolvent companies that would be as
that's
part
correct.
of.
Correct.
So what can you tell us about how those claims will be paid in the case of insolvent companies?
So as we understand it at this stage, because again, it's still due to be debated in the Senate, I believe next week. But if a matter was in scope, we would then at AFCA we would then recommence the action on that case. We would investigate that case, and we would likely, depending on the outcome, issue a determination. And once we've issued a determination, there are reporting requirements under the legislation where we would then provide and disclose that information of the determination to the Compensation Scheme of Last Resort entity. They will be independently run by their own board, and it's a separate organisation, even though it's a subsidiary of AFCA. They would determine it against the criteria in the legislation, and as long as it met that, they then would be likely paying the compensation out of the levy.
And the levy is on the banks, is that right? Who's paying the levy?
No, so there are three, as we understand, and I understand Treasury will be appearing in front of you today as well, and they will be best placed with some of the mechanics. But what we do know at the moment, there is three forms of payment. So the first form is, I understand under the current legislation, is the government will be paying part of the compensation for the first 12 months. There will be a one-off levy on the larger firms, which include some of the major banks, which will pay another part. But then beyond that, it will be levies on the industries that are in scope of the CSLR only.
And in that case, if you're going to bring a managed investment scheme into the scope of the CSLR, I guess that means it also brings a levy into it. Do you think?
If the change was consistent with the current design, yes, that's how you'd expect it to work. Is that the introduction of managed investment schemes would mean that managed investment schemes then become part of paying their proportion of the levy. That would be based off historic sort of losses.
Is it possible to change your powers retrospectively to fix some of these historic cases, or do we need to find other mechanisms for doing?
Look, I guess the theatre, again, we haven't investigated all the theatre cases, so I have to say, based on what we know without investigation, but from what we know at the moment is most of the theatre matters relate to the SIT, right? So hypothetically, and I'm not forming a view, by the way, I'm just saying hypothetically, if managed investment schemes are included in the scope of the CSLR, on the surface, they would be included in the compensation scheme of last resort. That's not the case, though, for the Libertas matters, because, as I mentioned, part of the compensation scheme of last resort is you need a determination. We can't even issue a determination against those Libertas matters because we don't have jurisdiction to do that. It's that incident.
Is it that we can change the law to do that or not?
Rose, do you have a view?
No, and that was the forward effect of the change in rules that we had earlier this year, not retrospective.
Because it goes to contractual rights, doesn't it? It goes to it's basically a matter of contract between the financial service provider and AFCA. Is that correct?
The member and the complainant, correct? Yes.
Yeah. Okay. Sorry to interrupt, Senator Pratt.
No,
we are coming to the end of our time.
Just one more quick question. The CSLR for non-managed investment schemes will cover previous insolvent claims going back how far?
November 1, 2018.
And in terms of people lodging or not lodging before the CSLR comes in place, if the CSLR is amended, will it still be possible for people to put in their applications?
Yeah, so at the moment, the legislation relates to complaints received from 1 November 2018 until current. And so, you know, again, depending on where the legislation was to land, if the scope was to be amended, what that would mean is any complaints that we have already received or that we do receive that relate to that particular product, again, depending on lots of other variables in the legislation, but on the surface, we would be able to consider those complaints, yes.
And what about those before? How many complaints did you receive before November 2018 on this? And
I
how?
can notice, but what I will say is the government did run a funded program called the Unpaid Determinations Program. I believe from memory, about $30 million was paid out to consumers who had an unpaid determination that related to that, you know, predates the 1 November 2018. So it related to our predecessor schemes. And so that was run and has been closed.
Yeah.
And so now the CSLR.
You wouldn't have expected any claims from Sterling people before November 2018 anyway.
No, and we didn't receive them. I think we received one in 2018, but the majority of them didn't land with us until very late 2019 and really into 2020.
Thank you, Chair.
Thank you, Senator Pratt, and thank you to our witnesses from AFCA. We really appreciate you joining us today, and I'm sure Senator Pratt would agree. I found that very useful in terms of understanding the issues and AFCA's role. So thank you very much.
I wish I had more time, but anyway, given the circumstances, I guess.
Okay, so thank you.
Thank you so much.
Bye.
Thank you.
I now welcome representatives of the Department of Social Services. I'll just check, can you hear me okay? Yep. Sorry, I can't hear you. I think you're on mute. But
can you hear us?
I can indeed.
Excellent.
So that's excellent. Okay. So thank you for appearing before the committee today. I remind you that the Senate has resolved that an officer of a department of the Commonwealth or of a state or territory shall not be asked to give opinions on matters of policy. I'm sure you've heard this before. And shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions on matters of policy and does not preclude questions asking for explanations of policies, factual questions about when and how policies were adopted. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as contempt. It is also contempt to give false or misleading evidence to a committee. If a witness objects to answering a question, the witness should state the ground upon which the objection is taken, and the committee will determine whether it will insist on an answer. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. Such a request may also be made at any other time. I invite you to make a brief opening statement should you wish to do so. And for the Hansard record, I ask if each of you could please state your name and the capacity in which you appear, please.
Can I just check you can still hear us? Because I'm getting told we're on mute here. No, great. Okay. Troy Sloan, I'm Group Manager, Pensions, Housing and Homelessness, and we do not have an opening statement, and I'll hand over to my colleague to introduce herself.
Caitlin Delaney, Grant Manager, Older Australians.
Okay, thank you very much. I'll give the floor to Senator Pratt.
Thank you. In the case of Sterling First tenants who sold their primary residence to pay for their rent or lease for life, to pay their lifelong lease, was the capital purportedly released considered equivalent to a primary residence, or is it treated as an assessable asset for, say, a pension test?
So, Senator, maybe rather than talking specifics, because I don't want to get in, obviously we can't talk individual cases, but sort of as a general rule, if you have a right or an interest in a house or in a place that you occupy and you have reasonable security of tenure, you are considered a homeowner. And so in those cases where many of these investors have 40-year leases, under those circumstances, they would generally be considered homeowners, and therefore under the asset test arrangements for the age pension, they would be considered homeowners, and hence they would get the lower asset-free area compared to non-homeowners, and then any value of the assets held any value of assets held would be included in the assets test, including where they had investments in unit trusts and that through Sterling Income Trust.
Okay, even though the owning of the unit trust, you couldn't have a valid lease for that long-term home ownership unless you owned those unit trusts. How does that work?
Yeah, so I think the important
They're not
here
releasable because you lose your tenancy.
Correct. You could. The way and again, we haven't looked into great detail around the financial arrangements, but yeah, as I understand it, you could choose to exit your accommodate or your dwelling with 6 months' notice, and then obviously, if you decide to do that, you could then take your assets, as you were saying, Senator. So I suppose what I would say is that the way the Social Security Act works is that it looks at these things individually. So therefore, it looks at, do you have a right to occupy a residence for a long period of time that makes you look like a homeowner? Yes, you do. Tick. So therefore, you're considered a homeowner. Stop. Finish that conversation. Now then, let's look at the assets that you hold.
I still don't. If the assets that you hold, in effect, buy you that long-term residence, do you treat it? It sounds like you shouldn't treat it as an asset. Were they treated as an asset or not?
Under the Social Security law, yes, they're assets because they have value.
But other homeowners don't have their assets treated in that way.
Yes, yeah, no, they do. They just have a different level of what's an asset-free area. But assets. So if I'm a non-homeowner, my assets are included in the asset test.
But Mr. Sloan and can I just tease this out a bit, Senator Pratt, if you don't mind?
Yeah.
Because I understand why you're struggling, and I must say I'm struggling too, Mr. Sloan. It just seems to me that there's double counting, because if I've secured my long-term right to residency by my deposit of $200,000 into what people were told was a trust, that is linked that is part of my occupation right. So I would not have the occupation right but for the 200,000 or whatever it was in the trust. So taking a helicopter view, there's no difference between that investment in the trust and my sunk equity in a property which I own the freehold title to. If you're going to provide equivalence, you shouldn't take into account the money that was in the trust, just as you wouldn't take into account the equity in a home. Do you understand my point?
I do, and I suppose, I don't know the ins and outs of these arrangements, but let's go back to a hypothetical. In a world where a homeowner decided to sell their asset, so they sold their house and they put that money into a trust. Well, actually, it doesn't even. Sorry, let's not even go back there. Let's start again. If someone takes some income, an asset, and put it in trust, even if they leave it there, like these people were doing, I would assume that there's income being generated from those investments, right? So the fact is that while a house, in the example you use, Senator, where there's a house, they're not generating income or can't generate income.
Okay, I can understand, but the concept is I'm in essence paying, say, 40 years rent in advance. So it's not to generate an income, it's actually securing my right of residence. So if I were to pay someone who was renting the house, who was the landlord, 40 years rent in advance, you wouldn't consider that an asset on which income is being generated. So my argument would be, in this case, conceptually, someone's paying that amount in order to secure their right to residence for a long period of time. And I would argue that you shouldn't consider that an asset. The only thing you should consider an asset is the income which is generated over and above, if there is any, the income generated over and above what's required to secure my residence. Do you understand the point?
Certainly, Senator, I see where you're coming from, but I suppose I would say that's not how the law worked in this case. And, you know, there is obviously a range of, that's exactly right. And I was about to say, I would like to, you know, I suppose the issue is there are many, many complicated financial arrangements that are designed, and I'm not saying this is the case in this point, sorry, this is the point in this case, but many complicated financial arrangements that are structured to try and get around the assets and income tests, and hence, you know, I would need to look further into each one to look at whether, you know, what you're saying, you know, whether there is equivalence between someone just owning a house and owning assets, because quite often we see on both the transfer side and on, you know, obviously the tax side, but that's more Treasury, obviously, we get very complex financial arrangements that are designed to try and find loopholes in the system. And again, I'm not saying that this is what this was about, but hence why sometimes you might see something that looks equivalent, but when you get into the details of it, it's not. So I suppose that's a better way of me to answer it, Chair.
Yeah, okay. Sorry, I'll give the call back to you, Senator Pratt. Sorry about that. I just wanted to tease that out.
How do you manage people who, on paper, have a failed investment and could be inside or outside the social security system, but their investment fails and they desperately need access to the social security system? How do you examine the underlying value or the worthlessness of their assets quickly to from being destitute?
Yeah, so there are what's called sort of unrealisable assets, and so those who are experiencing financial hardship, and back in July 2019 when this occurred, to be under financial hardship, you needed to have less than just a bit over $36,000 if you're in liquid assets if you were a couple, or a bit over $24,000 in ready available funds if you were an individual. If you had stranded assets, for lack of a better, my word, not the words used in the Act, if you had assets that were unrealisable and you did not have those amounts as a couple and a single person readily available, we are able to effectively ignore those stranded assets, and hence you would then go on to the normal income and asset testing, and obviously if you had $36,000 as a couple or $24,000 as a single, you come onto the pension.
Okay, and what in terms of the extra urgency that goes with that in the context of them also potentially needing to pay rent to remain in the property that they'd already paid for?
So yeah, there's two separate issues there, Senator. One, and don't want to speak for my Service Australia colleague in great detail, but the way I understand it is they certainly have trained service officers who are trained to look for people who are in financial hardship and prioritise those sort of applications to try and push them through quicker. And certainly if someone was starting to rent a property, they would qualify obviously for the age pension if they meant that, and if they qualified for the age pension and they are paying rent above what's the rent threshold for Commonwealth Rent Assistance, they would qualify for Commonwealth Rent Assistance as well.
Do you happen to know of circumstances under which people who might be eligible for the age pension sell their assets and it affects their eligibility, but that they're that actually their overall financial position, they are in effect worse off?
Sorry, I think what you're saying, Senator, I just want to make sure what you're saying is that someone could own a home, they would then sell that home and convert their house into cash or shares, whatever they choose to do with it. And then depending on at what level the total assets were, they would get less pension than what they would have if they remained with the bit of assets that were released stayed in the house. Is that what you're saying?
Well, yes, in part, but it's also then added to the complexity that because it couldn't be quickly assessed the value of those underlying assets, they couldn't get access to a full pension quickly, or in effect also rent assistance, because reportedly their tenancy had been paid for and they had a tenancy agreement, and there was a dispute, frankly, over who's paying the rent.
Oh, sorry. Okay. So again, it would be on case-by-case basis, Senator. And I suppose the point would become if someone was in that. I think what you're saying is someone is in that dwelling. They thought they had this 40-year lease. That disappears. Now, they then go to the landlord and say, actually, I would like to stay here. And the landlord says, well, that's okay, but I'm going to charge you rent. Yep, I'm with you now. And so basically what I would say is, so once, if they started paying rent, they would be able to go to Service Australia and say, I'm paying rent, this is the amount that I'm available, that I have to pay. So Service Australia could take that into account, whether they are eligible for CRA, if they're eligible for the age pension. And for the age pension, because they have a couple of things going here, because they've moved to a non-homeowner, the threshold for the assets test goes up. So they should be, and then because they don't have, and they have those if they have those stranded assets we talked about earlier, they can then come to Services Australia and say, well, that 400,000 I had sitting in, Sterling Income Trust is now not realisable because they've gone into into administration. then Service, again, on a case-by-case basis, Service Australia would say, yes, they're gone into liquidation, you can't access that, so we ignore those assets for when we then work out what your pension, what your eligibility for the age of pension would be. And they're, on top of that, given that they're no longer a homeowner, they would then, if they get the pension, they can also then get the rent assistance for the negotiated rent they're now paying with the on a weekly or fortnightly basis. Yeah.
Do you happen to know if pensioners were paying Sterling First, paying rent assistance into their Sterling First lease arrangements?
Look, I don't have the specifics in front of me, but
they
what I
might
would say,
have gone separately to the scenario of a collapse. This financial company might also not have been getting people to pay their rent assistance.
so again,
as a way of leveraging that, and they built it into their business as a way of leveraging, getting around those assets test type thing.
And so why don't we go to specifics?
Because you're aware of whether that occurred or not, and I don't know.
Yeah, so I don't want to go into specifics because whether someone could get rent assistance or not would depend on their specific cases. But if I go back to the general, and this is my understanding of the general of what was happening with Sterling Income Trust, was the general was that people in this investing with Sterling Income Trust had long-term leases and they were considered homeowners. Once they're considered homeowners, they cannot get rent assistance. So I said, again, my general understanding would be as long as they're meeting that criteria of long-term tenure, they're considered a homeowner, therefore they couldn't get CRA. But again, depending on the specifics, how long...
How can that be done independent to how can you make that decision independent of the capital that's keeping them there?
Because homeowners are not eligible for CRA under the business.
And I'd like you to dig back into this because I'm not sure of the extent to which Social Security did treat them as homeowners and whether they did or did not get rent assistance, frankly, as part of the business model.
Yeah, we can take that on notice. If they weren't considered homeowners, absolutely, then assuming they qualified for the pension, they would be eligible for CRA. So yes, we can certainly dig back into the files and see whether they were on the whole, if all of them, none of them, some of them were considered homeowners. But my understanding is they were, but we will double check that, absolutely.
Okay, and what can you tell us about, in general terms, people being able to, you did say you try to act quickly in terms of enabling people to release their assets, to show that there's no longer any underlying value in the asset. If someone's still in the house, but they don't, and you treated them as a homeowner, but actually the rest of that asset has gone, it's my understanding there were some delays in people being able to unpick this in getting their eligibility properly assessed.
Yeah, so I just want to nuance something there, Senator. If you're in financial hardship, as I sort of talked through earlier, it is generally the expectation of Services Australia, and you'd have to talk to them to the extent they hit this 100% or something different, that if you're in financial hardship, you will be prioritised. Now, there may be cases where investors did lose this money, but they may not have been in financial hardship because they had other assets, for example. So I don't want to say all of these people, if they've lost their investment, would be prioritised. However, I know Service Australia works very, very hard to get people through as quickly as they can, but obviously those in financial hardship are prioritised. And then when we come to the second part, again, I think I go back to the sort of answer I gave to the chair around these things can be quite complex. They can be very complex financial arrangements. I'm not saying these ones are, and again, I haven't looked into them, but sometimes if they are complex financial arrangements, they will take some time to work through. So hence, I'm not saying there was, but if this was the case...
No, they certainly were.
Yeah, and I haven't looked
Certainly
into that,
weren't
Senator, so I
complex.
don't want to say they were or they weren't, but what I'm saying is some of these are quite, some arrangements can be quite complex, so they can take some time to work through.
And how do you generally manage social security assets and examining that and the complexities of managed investment schemes more broadly?
For how we actually look into each sort of the arrangements, I will take that on notice and talk to my Service Australia colleagues. The general principle, which, the policy, if you like, is that, all assets are captured in the, except for a few minor, obviously a few minor things such as war metals is my understanding. But generally most assets are caught in the assets test, and how it's administered, I can go to Service Australia and we can take that on notice and see what we can do.
Thank you, Chair.
Mr. Sloan, I just have a few more questions
Yep.
in relation to this matter in particular. And if I can introduce them by saying I'm gravely concerned that some of the victims of the Sterling Income Trust debacle and Silverlink debacle have been denied social security support, rent assistance, because of the way in which these extraordinarily complicated arrangements have been interpreted by the federal government. And I'm not, in making that statement, I am not in any way being critical of the Social Security Department, Centrelink. I'm not being in any way critical. These arrangements are extraordinarily complicated, but I'm very, very concerned that people have sold their house, looked to enter into a long-term residential arrangement, in effect, accelerated the payment of rent, and that's been considered an investment in inverted commas, when the reality is there should be no difference in the way in which that investment is treated as opposed to equity in a house. And I'm really concerned that there are victims of this collapse who not only have lost all the equity in their home, but when they needed social security support, rent assistance, have been prejudiced because of the complexity of these arrangements, and they are extraordinarily complicated. So can I ask you to take on notice whatever you can find out in terms of people who have been impacted by Silverlink, the Sterling Income Trust, who were denied social security payments or rental assistance because of the way in which the investment, so-called, was treated. Because from their perspective, what they were doing was paying a considerable sum of money in order to secure their residential rights. They didn't see themselves as participating in an investment, in a managed investment scheme. They saw themselves as securing their future occupation rights. And commercially, that was really the intention. So could I ask you to take that on notice? Does that make sense?
Absolutely. We can look in and see what we can find in the Service Australia system about what people held and what treatment they fell under. Yep, we can certainly do that.
Because it could well be that there needs to be some reassessment of that, because it is extraordinarily complicated. And from my perspective, the practical effect of it was they didn't have access to that investment. It was an investment. From their perspective, basically paying an amount on an accelerated basis to secure their future living arrangements for 40 years or whatever it was. So I think it is something which the department needs to reflect on very closely, and I'd be interested in any further information you can provide.
Yeah, happy to do that, Chair. We'll look into it and see what we can find.
Okay, thank you very much. I think we're moving on to Senator Steele. John, did you have any questions for these witnesses, or were you joining us for the next witnesses?
Just one, Chair, if that's okay.
Yes, of course.
Can you hear me clearly enough? I'm doing a combination of teleconference. Okay, cool. Could I just ask the department specifically if you could provide us on notice, and I think this is part of what Senator Scarr was asking for, the precise number of Sterling First people that were involved in the Sterling First Trust that have been denied the relevant social service support that they have requested. So I'd like to know how many applications were made for assistance and how many of those applications were denied, and if any of them were approved, I suppose how many were approved. Is that something that you can provide?
We can look into that. Yeah, we can look into that, Senator. And I think people might be at committees might be sick of me saying this. The Service Australia's data system is quite complex, so we'll dig in there, see what we can find, and then we can report back and see what we can find. But I get what you're asking, and there might be some people who got some pension, some that got none, and some that got part rate pension, right? So we'll try and dig out what we can find. Yep.
And could I just subsequently ask you to, without being conscious, of course, of people's right to privacy, if you can provide us with the grounds upon which the denials were, what was cited in the rejection, so that we can understand the exact interplay between their involvement in this situation and the denial, the rejection given by Services Australia, if in fact the rejection was the response they received.
Yeah, we'll try and aggregate it up. Try and get some categories, Senator, reflecting your point. There's not a lot of people involved, is my understanding, and we don't want to breach those privacy issues which you raised, and I agree 100%. So we'll try and, whatever info we can find, we'll try and chunk up into categories to try and give you that information if we can find it, but still protect privacy.
Yep. And just as last one, and I apologise, Chair, I said one and then they turned into three, but I just want to just clarify for me, because I'm much more familiar with NDIS processes in some of these areas. But if I understand the situation that has been shared with me by particular people affected by this situation, there's been a decision made that, for whatever reason, the structure and type of the Sterling First investment and the situation that people have found themselves in has meant that the department doesn't feel they meet the criteria for certain types of support. Is there a process by which ministerial discretion can be utilised, or other discretion can be utilised to grant somebody assistance in exceptionally complex circumstances? Because what it seems to me is, as Senator Scarr pointed out, putting the technicalities of this particular structure aside, people believed that they were investing funds to secure themselves long-term accommodation, and then that kind of disappeared in exactly the circumstance that things like rental assistance and other types of support would then be made available. So is there somebody that does have that discretion within the Services Australia structure?
Yeah, so Senator, so not to rehash in detail, we've sort of talked at least at some of the discretion, but more broadly, there's not ministerial discretion in the social security system. But what we do have is what we talked about earlier, which is not quite where I think you're asking, but where we have special hardship provisions, where if people are in hardship and they can't access certain assets because things like liquidation, which we're talking about, we can look through those or ignore those stranded, again, my word, not the words in the Act, the stranded assets to then work out if they're eligible for a pension or not.
All right. Okay. Thanks very much for that. That's really useful. That's it, Chair.
Thank you, Senator, and thank you, Mr. Sloan and Mr. Laney, for joining us today. That was very useful, and my apologies for giving you some homework to do.
No, not a problem. Thank you, Chair. Thank you, Senators.
Thank you very much. I now welcome representatives of the Department of the Treasury. Can you hear me okay?
We can, Chair.
Excellent. Thank you for appearing before the committee today. I'm now going to read out a blurb, which I'm sure you've heard about 101 times. I remind officials that the Senate has resolved that an officer of a department of the Commonwealth or of a state or territory shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions on matters of policy and does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as contempt. It is also contempt to give false and misleading evidence to a committee. If a witness objects to answering a question, the witness should state the ground upon which the objection is taken, and the committee will determine whether it will insist on an answer. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. Such a request may also be made at any other time. I invite you to make a brief opening statement, should you wish to do so. And for the Hansard record, I ask that each of you please state your name and the capacity in which you appear.
Thanks, Chair. Mahita Zahid, First Assistant Secretary for the Financial Systems Division.
And Paul Argent, Director, Retirement Advice Income Division, Treasury.
And Chair, we're going to have an opening statement. We'll just go straight to your questions and see if we can be helpful.
I'm sure you will be helpful. You're as helpful you're coming along today. So with that, I'll go straight to Senator Pratt.
Thank you very much. In relation to the compensation scheme of last resort, have all submissions been made public in the context of the review of the draft laws? And I know the laws are before Parliament, but has government provided a written response to those submissions?
So, Senator, the submissions aren't public as yet. The decision to the timing for publication of submissions is a matter for government. As a matter of course, we don't always provide written responses to submissions. Generally, submissions get sort of considered. We did a number of pieces of consultation as part of the development of the legislation and the proposal. So we would have engaged with a number of the stakeholders who've provided submissions. But as a matter of course, we don't generally provide a response to submissions.
Well, the legislation is before the Parliament, and as a parliamentarian, we need to make decisions on the proposed legislation. How can we do that without seeing the content of those submissions or the government's response?
So, Senator, the government's response is obviously the legislation that is before Parliament, as you've noted. And as I've previously indicated, the timing for when submissions are published is a matter for government. So unfortunately, I can't offer too much more on that one.
Has the government drafted amendments to the compensation scheme? I'm not asking what they are, because I guess that would go to policy, but have you drafted or looked at amendments?
Senator, just so I'm clear, you mean amendments to the bill that's before Parliament?
Yeah.
No, Senator, not to my knowledge. The bill, the Treasurer's introduced the bill which reflects government's policy, and that's what's before Parliament.
What is the government's policy position in relation to compensation for victims of the Sterling Income Trust and other associated collapses?
So, Senator, obviously you've heard from lots of respondents, the position in relation to the compensation scheme of last resort is that managed investment schemes are not included in the scope of the CSLR. The CSLR will cover personal financial advice, credit intermediation, so things like mortgage broking, securities dealings, and credit provision. So it doesn't cover the products that we're talking about today. More broadly,
what if that individual financial advice was to invest in a managed investment scheme?
So to the extent that the financial advisor engaged in misconduct, so failed to undertake or provide that advice in a compliant manner, the compensation arising out of that deficiency would be covered in the compensation scheme of last resort, but not as a, if the advisor did the right things, relied on the PDS, did the fact find, met their best interest obligations, but the product failed because the product wasn't as, or there was deficiencies in how the product was operated, then the compensation scheme of last resort would not respond because the advisor did not breach their duties or their legal obligations.
In terms of the Department of Treasury's oversight of ASIC, have you looked at powers that ASIC would or should have used to act promptly in the case of this collapsed managed investment scheme?
So, Senator, in terms of Treasury's oversight of ASIC, ASIC is an independent regulator. Treasury does not look at or scrutinise individual actions by ASIC to identify whether they acted deficiently or whether they should have acted differently. In terms of when collapses happen and in terms of when matters such as Sterling arises, there is engagement with ASIC. There's obviously a lot of scrutiny through Parliament where the government looks at whether there are reforms that are necessary. In the context of Sterling, we've heard from ASIC previously, there has been a number of legislative reforms that the government's implemented. So there's been lots of mention of the design and distribution obligations, the product intervention powers. Coming out of the Financial Services Royal Commission, there's also been strengthening of a number of powers that are available to ASIC, including things like breach reporting regime, the penalties that ASIC has available to it. So there's been a lot of focus in terms of ensuring that ASIC has appropriate powers available to it to address misconduct, to respond to misconduct. However, it is not, Treasury's role to second guess how the independent regulator exercises those powers that are made available to it.
What can Treasury point to that demonstrates there has been concern from Treasury or from government or the victims of this collapse?
So, Senator, kind of broadly in terms of Treasury's role, we obviously advise government on policy matters. We engage with stakeholders and provide that feedback. And there's been a lot of engagement in relation to the Sterling matter, both through the development of the compensation scheme of last resort, the engagement we have with AFCA, but also more in terms of advising government and kind of making sure government's aware of the circumstances and what we're hearing. In terms of actions taken by government, obviously refer to the work the government's done to strengthen ASIC's powers in a number of areas. In particular, I think the design and distribution obligations and product intervention powers. And I mean, I don't seek to speak to ministers and parliamentarians. Obviously, there's been lots of engagement from members of parliament and the government with affected and victims of Sterling Group. So I don't I'm not in a position to speak to how the government has provided that support in full.
Why do you point to CSLR as one of those points of support when they're specifically excluded?
Sorry, Senator, maybe I wasn't clear. It's an area where we've engaged with victims of Sterling Group and engaged with the concerns that's come through as a consequence of what has happened in the Sterling. I'm not in any way suggesting.
Will you amend? Is the government considering amending the bill based on those concerns?
Senator, that's a matter for government,
not the government.
Yeah.
Are you aware that ASIC was advising people to look to the compensation scheme of last resort as a way of resolving these issues?
So, Senator, we've undertaken 3 rounds of consultation on the compensation scheme of last resort. A consultation paper was released by Treasury. I may get the date slightly wrong, but it was December 2019 from memory before COVID hit. it proposed a number of models, including a broad model and a narrow model, and it looked at and it canvassed a number of issues.
So who proposed the model?
It was a consultation paper released by Treasury looking at options to implement a compensation scheme of last resort.
And so on that basis, ASIC was referring people to AFCA and the potential scheme. On what basis were they referring them to the compensation scheme?
So, Senator, at that point, the government had not made a decision on the scope of the CSLR. It had not introduced legislation. So those decisions had not yet been made. So ASIC was making consumers and the victims aware that the government was considering this policy and referring them to AFCA on that basis, as the government had not yet settled its position in relation to the CSLR legislation.
Don't you feel like you led people down the garden path, though, in this regard, if the laws ultimately don't address these issues?
Hindsight is a beautiful thing, and with hindsight, would ASIC have taken the same actions? Probably not, if everyone knew that they would be exempted. As I said previously, at that point in time, the government had not settled legislation for the compensation scheme of last resort.
All right, well, let's hope there's still capacity to amend the legislation and fix this issue. Are you aware that ASIC was, while referring people to AFCA with a view to the CSLR, are you aware that ASIC was aware that the draft laws, as they understood it, and the model was not going to include these people?
Senator, I cannot speak to what ASIC was and was not aware of at that point in time. So it would need to depend on when things were done and when communications were had and at what stage in the process. So I'm not in a position to comment to what ASIC's state of mind was when they were advising.
Can Treasury point to where or how these victims have been successfully supported or helped in terms of the guidance and advice that's been provided to them?
Senator, I'm not sure I fully understand the question, but I'll have a go at trying to answer it. So in terms of communication with victims of the Sterling matter, a lot of communication has occurred through AFCA, and I think you've heard from AFCA just previously, and AFCA's done its best to kind of communicate where things are at in that process.
Yeah, no, I think my question's more specific. It is, what is the point of all of this regulation, all of these institutions, all of these laws, the years and years and years that have been chewed up since people, in the process of people losing their money, in the engagement with all of these institutions, with ASIC, with AFCA, what is the point of any of that if it leads to naught? Can you point to anything that has actually assisted these victims in that merry-go-round of the years and years that have happened with the pauses on AFCA, with the CSLR laws? Where has there been a meaningful support from government to help address these issues in terms of what the objective of good law and good administration and good oversight should be? Because I can't see it, and I'd be interested in what you can point us to that demonstrates that there's been anything good to come out of this. Yes, we've had law reform that might help some future victims. We've got to test the robustness of that. But has there been anything that you can point to that has made a meaningful impact in a supportive way in this cluster bomb that's gone off in people's faces?
So, Senator, as a general matter, I mean, the financial system does not seek to regulate for all product failures, and I think you've heard that from ASIC. And so from an individual consumer perspective in relation to Sterling First, without knowing each of their circumstances and what support from government, including the pension and other things they've been able to access, I'm not in a position to answer it. As we've said, the CSLR doesn't respond. The law reform is by its nature generally prospective, so it seeks to limit and avoid similar issues arising in the future. As a general kind of principle, not just in the Australian financial system, but actually by and large global financial systems of comparable jurisdictions, the system doesn't seek to prevent all financial failures of financial products. There's some significant consequences of trying to do that, including, how the efficiency of the economy as a whole. So in that sense, by its nature, law reform is going to be prospective. It's going to be focused on how do we limit, preclude, and prevent similar issues arising in the future, balancing out the trade-offs that if you have a zero failure system, then you've got a very constricted financial system. And generally that's not, that's a trade-off that Parliament and government has to trade off when making these decisions.
What can you point to that demonstrated in the system as it stands, that in all of that we don't regulate for all product failures, that inevitably it is the most at risk and those with what little they have that they lose, that are ultimately the ones that fall victims to completely uneconomic investments like this one? Surely the corporations law, even before the changes, should have things that we can point to in it that should have addressed their vulnerabilities.
So, Senator, we've got various things in the corporations law that look at, what is in effect a retail client. We don't go down different categories of who is a retail client and are you a mum and dad and what level of financial literacy do you have before we allow people to engage with various products in the financial system. But as a whole, we've got a category of financial products that are prudentially regulated. For example, your superannuation, your banking and your insurance products, where they're core products to every Australian, their mum and dad products. The system requires you to engage with that, and there's a very high degree of protection that's provided around those products. We then have a category of financial intermediation, like advice and so forth, where you're going to someone that you trust. And the system ensures through removing conflict of interest in remuneration, through providing a best interest duty, heightened education standards, that those people that you're trusting in the system are trustworthy and professionals. And then there's a wide range of financial products that exist in the system, anything from trading in financial derivatives, in terms of managed investment schemes, securities, where the system is focused very much on making sure the disclosures operate effectively, and the fact that introducing the design and distribution obligations, that those products are marketed to appropriate customers. There's anti-hawking law.
So it's not always clearly marketed to appropriate customers. Why, in this case, you've spoken of the high levels of protection that should in principle exist in, whether it's superannuation or the like. Why are not these victims in the case of Sterling affected the same levels of protection in terms of the protection of their investment?
So, Senator, it's generally where it's a good question. It's where you draw the line of what is prudentially regulated in a financial system and what is not. Pretty much globally, there's been an alignment towards looking at, and it goes back to the financial systems review that Wallace did. It goes back to what are the core fundamental products that every Australian and everyone in our economy needs to access. So you need insurance, you need your banking services, you need to ensure that the deposits in your salary is safe, and you need to ensure your superannuation, which the legislation requires you to throw your money into, is appropriately protected. Prudential regulation comes at a very significant cost, both to financial providers and actually to consumers, because those entities have to hold very, very high levels of capital. They have to hold very strong. So that comes at a significant cost to both consumers and to the firms that runs that business. So from a global perspective, there's been an alignment that it's usually superannuation, it's mandatory products products that you have to access that are subject to that level of protection. The other sort of product where we've got a high level of regulation of is obviously credit. So the credit, most people will need to access a mortgage, will need to access a loan. And because of that, those products are subject to a high level. Speculative product like managed investment schemes and so forth are not subject to that regime because obviously it's very hard to have the prudential framework around that and comes at a significant cost to that regulation.
Chair, I might pause there for a moment. I'm happy to come back, but I'm just trying to put together the picture of what we've been listening to for the last few days and the seeming impossibleness of inserting that into the kind of landscape that Treasury is outlining. I just need to pause for a minute.
Yeah, sure, Senator Pratt. Can I ask one question? I've been reflecting on this whole situation. I've got a commercial corporate background. I was a company secretary general counsel of a listed public company. So I've been involved in capital raisings, preparation of prospectuses, etc. And it just seems to me that in the nature of this scheme, you're dealing with a particularly vulnerable cohort of people, elderly people who are looking to secure their future retirement and their place of residence for their future retirement. And as the clock ticked after issues were raised, more of these vulnerable people were joining up every day and committing inexorably, irreversibly to this failed scheme. And so you're dealing with a number of attributes in this case, particularly a cohort of particularly vulnerable people. Secondly, an extraordinarily complicated scheme. Even with my background, trying to work out the corporate structure and the matrix of documentation and the legal obligations, etc., it would take me a week of analysis. So I can't imagine a consumer being able to get their head around it. And third, particular time sensitivity around the need for urgent action to be taken, whilst at the same time, there are due processes which have to be followed from the regulator's perspective. I'm just interested in any comments or thoughts you have from either of you in relation to the specifics of this case from a Treasury policy perspective, because it's just not the same as someone going to invest in a real estate trust and I'll deposit 20,000 and I'll get some return over time. This is actually dealing with their ability to house themselves, shelter themselves into the future. So I'm just keen on any observations or thoughts you have given that particular context.
Thanks, Chair. So I'll start off. And this is just a bit of an observation from me from hearing bits of what's come forward and the engagement with ASIC. So there is, as you say, there's a balance between the regulator having appropriate powers and the regulator needing to exercise those with appropriate checks and balances. The product intervention power, which I think ASIC referred to, and I think it's come up a few times, is what the government has implemented to allow the regulator to move a lot quicker than what it previously had been able to have the proactive intervention when it identifies. There's still checks and balances that are in place, and whether they're appropriately calibrated. The PIP is a relatively new power to ASIC, so we're monitoring that as it goes along. ASIC's used that successfully in a couple of cases, more recently in risky products. So the product intervention power really reflects where government landed in terms of an appropriate checks and balances. Now, in this particular case, it is tragic what's happened to a whole range of very vulnerable consumers. But counterbalancing that by the parliamentary system, our administration system, is never going to support a regulator being able to take action without following due process, nor would I imagine, from just speaking from Treasury's perspective, we would want a regulator to be able to, without doing due process, without offering fairness of process to both parties involved, to take action. So the product intervention power is really where government has landed, and it seeks to enable ASIC to act once it identifies a product which could cause significant detriment. Now, whether that allows ASIC to move quick enough, we are early days in that implementation, and as always, these things get reviewed and looked at and assessed and responded to.
Can I just raise one point in that context? And Senator Pratt has raised this point as well during the course of our hearing. I look at and I don't know if you've had an opportunity to look at the statement of concerns which ASIC sent to the promoters with respect to their PDS, product disclosure statement. It's 15 pages long, the statement of concerns. And these concerns deal with everything from the lack of disclosure around conflicts of interest, lack of disclosure around significant risks, lack of disclosure around how the scheme actually operated. And 15 pages of these concerns. And I'm looking at this from a policy perspective, and I'm asking myself, if the regulator has to send 15 pages of concerns in relation to a whole range of matters which go to the heart of the investment, the actual heart of the investment, there are two regulatory responses, two paths I guess you could take. The first path is our 15-page letter of concerns with respect to these matters, amend your PDS, and then go on as you were. The other response is to be, this thing is so flawed. The people promoting it were so either A, bereft of the capacity and the ability to offer this scheme, or B, weren't interested in complying with the law. And on either basis, the thing should be brought to an end, closed down, and future people protected from any investment in this thing. I'm interested in your response in terms of those two policy options potentially that are there in the face of a PDS which generated 15 pages of key concerns.
Senator, as I've previously flagged, it's not, Treasury doesn't second guess how the regulator responds. One thing I would say is it's not apparent, and I'd need to check this with ASIC colleagues, that in that circumstances, ASIC would not have, in the current, if this happened today, they would not have access to the product intervention power to say, we think there is significant scope of harm, and therefore we would seek to go down the PIP route. Now, I haven't had detailed engagement with ASIC on that. There may be matters in that I'm not aware of, which would preclude ASIC from using that as a tool. But ultimately, that is a decision that a regulator has to take.
Do you understand the point I make?
No,
I mean, I've been involved in the preparation of prospectuses, capital raising documents, and those documents can always be improved. You can always dot the I's, cross the T's, better express a risk, come up with clearer, more concise language. Maybe there's a little bit of oversight of something. But at the other end of the spectrum, if the regulator is actually producing 15 pages of major material concerns that go to the heart of the transaction, don't you reach some sort of point on the policy spectrum where the thing just has to be shut down as quickly as possible? It's like the sirens going off at the fire station. Everyone's got to get in the fire engine, get to the fire, and save whoever you can from a policy perspective. Do you appreciate that?
No, Senator, I absolutely appreciate your point, and I get where you're coming at it from. I guess, I always answer with my Treasury hat when I come to these things, and the way we have the regulatory system is the regulator has a range of tools that it has access to, and it needs to look at the circumstance in that circumstance and decide, are we evacuating the building or are we trying to put out the fire? And that's a decision they have to take based on the information they have to hand, their overall strategic prioritization enforcement matters.
You can do both. You should do both. You should evacuate and put out the fire.
Well, yes, if you can put out the fire. I think I was going with your analogy that
I appreciate
point sometimes where the fire might be out of control. So that is a decision that the regulator has to take. And from Treasury's perspective, we're focused on, does the regulator have both the fire engine and access to the water supply? And I have been told that I should stop using analogies when I turn up to parliamentary hearings, so I'll stop there.
I love a good analogy. I think it's a very useful tool of compliance. So I'm going to give you contrary advice. I quite admired the way you extended my analogy. So don't listen to whoever's counselling you in that regard. Don't listen to them. Don't listen to them, Ms. Zahid. Senator Pratt, do you have any other questions you want to ask of these witnesses?
Yes, just briefly, I wanted to return to the questions regarding the PDS. At a political, you've talked about Parliament and ministers and members of Parliament, and and AFCA and everyone playing a role. But ultimately, you've pointed back to the independence of ASIC and that it was their responsibility as the regulator to get on top of this. You've also pointed to the notion that, of course, it takes time for them to pull that evidence together. I put to you that the PDS was so defective that it couldn't possibly be repaired, and further to that the statement that said, well, we don't regulate to prevent failure, but then you put those two things together and you have an inevitable disaster, because there was therefore no onus for ASIC to insist that the PDS was effectively altered in a way that would make a meaningful difference to investor decisions, because they were allowed to get away with it. Is that the way that the system is supposed to have worked?
So I don't think anyone's trying to design a system which results in victims losing their long-term home. We kind of very much focus on people's security in their place of residence. I think the point that I didn't catch all of ASIC's earlier appearance, but I think the point that ASIC was making is it is a system that provides the regulator with certain powers in relation to disclosure. So where there is defective disclosure, ASIC's got powers. Where there is misconduct, ASIC's got powers. But ASIC is not set up to prevent product failures. They're not set up to vet products. They're not set up to look at a disclosure statement of a product, match it up against exactly what the product's doing and approve that. That's not the regime we have in place. And therefore, as I've said previously, it's not in Treasury's position to look at exactly what ASIC is doing.
I think those two statements are somewhat contradictory, because these charlatans were able to, therefore, because ASIC's not set up in that way, they were absolutely allowed to keep driving their business model until all the underlying capital had gone, and our regulatory system enabled them to do that.
So, Senator, I think where you get to it, that if you want to fail safe regulatory system where you've got that level of scrutiny, that comes at a significant cost, and it kind of goes back to my earlier point, is we don't prudentially regulate these firms. We don't have a system which seeks to have a zero failure system in the financial system.
Does it not concern you, therefore, that in effect the charlatans attached to this market themselves as having product disclosure statements, and that they're regulated and that they're registered?
So I think what I would say is it's devastating that these are the outcomes that some there's a lot of people who have suffered tremendously out of this process. We have a regime that says you must have a fit for purpose product disclosure statement, we have a regime that says you must not mislead or deceive consumers. And we have the regulator empowered to take action, but there is a very, very large number of financial services products, very large number of product providers, managed investment schemes, derivatives, and so forth. So in effect, it is a system that enables or allows or accepts that at certain times there will be failures of products. It is a very difficult circumstance for those individuals to be in.
Is there a difference though between the failure of product and allowing such misleading and deceptive products to exist at all? It still sounds to me like we create a licensed regime for these highly misleading and deceptive products to exist for a long time, a very long time, before we're prepared to do anything about it.
So at the risk of repeating myself, in some senses, we create a regime. So we do, the licensing regime requires that the product disclosure statement be true to and reflect the risks of the product. And really design and distribution obligations seeks to address at least part of that remedy, which says, actually, you need to figure out who these products are suitable for. You need to identify a marketing strategy that means you're selling to those consumers and in effect annually review that to make sure you're doing that. So it is a system which recognises that there needed to be more done. We've implemented these laws that have just come into effect, so it's very hard to assess the efficacy of that. But it is a system that's gone from recognising that actually product disclosure statement isn't sufficient. We need to have an obligation on product manufacturers and product providers to say, who is this product appropriate for? Who will benefit from this product? And then find a sales strategy that targets those products. Are you going to have charlatans in the system? Are you going to have dodgy players in the system? Are you going to have people who break the laws? Absolutely, we have that in all aspects of life. But the system and the Parliament's kind of enacted laws to go that step further, whether it's too early to tell as yet, given when the laws have come into effect, whether that's going to, how effectively those laws are going to address these problems going forward.
Trying to keep an eye on it. Have we gone over time? I think perhaps.
I think we have, Senator Pratt.
Yeah,
so...
I did have further questions, but I think I'm going to have to leave it there.
Okay. Senator Steele-John, did you have any questions for these witnesses?
Yes, I do, Chair. That's all right.
Okay. If you could just be as brief as you reasonably can, so we can move on to ASIC. But you have the call.
Yeah. Thank you. So am I right in understanding? You said earlier that ASIC and Treasury don't have a role in necessarily vetting these types of financial products. I'm right in thinking then that actually nobody has that role at the moment.
That's right, Senator. So Treasury doesn't vet financial products. ASIC, and ASIC's coming in after us, can obviously explain their role, but ASIC has a role in licensing the product provider, certain roles in preventing misconduct, but there isn't an expectation on ASIC to vet the product itself, to look at the product and say, it's a good product, it's not a good product, or it's a complete chunky product, what on earth are you thinking? That's not the role that ASIC plays.
Okay. Now, in relation to the line of where exactly does your prudential regulation come in? You have articulated to us today that that is ultimately a judgment call for Parliaments to make, is the point that you have made to us, and you have articulated in your belief, in Treasury's view rather, that there is a line where wherever you put that line, you balance off the protections afforded to people versus the flexibility and therefore in some ways the productivity of your financial market. I think what we have heard as a committee examining this particular case is that as parliamentarians we have set that line too much in one direction. If we've got a situation where this can occur, and where individuals that have, you know, saved and worked all their life, having invested in such a scheme, have then been left in this situation. And that is something for us to reflect on as legislators rather, and to make recommendations as to where that line should be. I would also put it to you, however, though, as representatives of the Treasury Department, that Treasury plays a unique role in the development of Australian policy. When Treasury speaks, influential policy folks and folks in government crafting legislation listen. Whether or not they should is sometimes a view that I disagree on as a member of the Greens, but that is the reality of our political dynamic. And I would gently suggest to Treasury that there is also lessons that Treasury can learn about the advice that you give to legislators in relation to where that line is set. Because if we've got a situation where old folks that have done everything right in their lives have just tried to get a secure, you know, bit of time for themselves, you know, to live together, have been treated so badly by this organisation and have, for whatever your intention, ended up in a merry-go-round between Treasury and ASIC as to who was responsible and who could help, that's really not good enough. So I would gently suggest that Treasury also look carefully at the outcomes of this inquiry and think deeply about what you've learned from the evidence that you've heard through the course of this inquiry. But that's it for me, Chair.
Thank you very much. And if I can thank the witnesses for attending today, and if I can just encourage you to keep using your analogies. I found them very helpful. Thank you.
Thank you, Chair.
Thank you, Chair.
Thanks,
Thank you,
Senators.
Thank you.
I now welcome back representatives from the Australian Securities and Investments Commission, I think.
You better stay with us for a few minutes. Hello, Senator. I don't know if you can see or hear me.
I can hear you, Chair. Now we can see you, and there's more of you this time.
Well, we have a young man helping me, making sure that the mute button doesn't misbehave.
Okay. Okay.
Because the last time I was muted without any intervention from me, so I'll do my best to remain online.
Okay.
It's actually exactly the same team. I know, Chair.
I just need to read my blurb, and then I'll come to you, Chair. Sorry about this, but excuse the repetition. Thank you. I now welcome back representatives from the Australian Securities and Investments Commission. Thank you for appearing before the committee today. I remind officials that the Senate has resolved that a Commonwealth officer shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions on matters of policy and does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as contempt. It is also contempt to give false or misleading evidence to a committee. If a witness objects to answering a question, the witness should state the ground upon which the objection is taken, and the committee will determine whether it will insist on an answer. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. Such a request may also be made at any other time. Chair Longo, I now invite you to make a brief opening statement, and I note that you have circulated something. Senator Pratt, have you seen the statement that was circulated?
No, I haven't pulled up on my phone if I'm able.
Okay, so If I could therefore invite you, Chair, if you'd like to, Chair
Yes.
Longo, to make a refreshed opening statement or a supplementary opening statement.
It's very short. Yeah.
And yeah, I'll get you to read it. And for the Hansard record, could you please each state your name and the capacity in which you appear?
Thanks, Chair, Senator. My name is Joseph Longo. I'm Chair of the Australian Securities and Investments Commission, and I appear in that capacity today. I was hoping to get that short opening statement to you a little sooner, but hopefully it's sitting in people's email boxes. But so it's a short statement, and I'll start now, if that's okay. Thank you for the opportunity to appear at the second day of hearings into the Sterling Income Trust. I've listened to much of the evidence, especially from individual witnesses. Their stories show the deep and ongoing impact of the collapse of the Sterling Group on them. I would like to start by adding an event to the chronology. I'll just quickly pause here. This is the chronology on page 31 of ASIC's written submission, which I regret did not appear in our original submission. So I'm about to add an event. I know the committee has placed a lot of value on the chronology. However, I do not think that this leads to any change to my or ASIC's views. In February 2013, ASIC placed a stop order on Theta in its capacity as responsible entity of the Rental Management Investment Trust, which was the former name of the Sterling Income Trust. The PDS in question related to a proposed listing of the trust on the Australian Stock Exchange. In accordance with our usual procedures, our corporations team considered the matter. We understand there were some non-compliant commercial features of the proposed offering that resulted in a stop order being made. The PDS related to the aggregation of rent rolls and did not entail any lease for life or similar arrangements. The product offering was completely different to the one currently being considered by this inquiry. We came across this stop order as a company with heritage in its name was referred to in this PDS. ASIC remains of the view, as set out in our submission, that we acted in good faith at each point in this matter, based on the information and evidence available to us at the time. While I acknowledge that tenant investors would have wanted ASIC to move faster and more forcefully, our financial, legal and regulatory system requires ASIC to obtain proper evidence and follow due process before it intervenes. We note that comments were made that ASIC should have acted more forcefully by seeking an injunction after it received a referral from the Consumer Affairs Division in Western Australia in March 2017. In 2017, we did not have admissible evidence that would have supported injunctive action being taken in respect of the Sterling Income Trust. As was noted by Justice McKerricker at the conclusion of his 366-page judgment imposing a civil penalty against Theta, His Honour said, "Regulatory proceedings by their nature typically incur greater upfront cost in the preparation of the claim because a regulator must ensure that it knows the scope of the documents relevant to particular issues and that the cooperation of any third parties, as well as officers and employees, will be forthcoming. ASIC understandably requires a reasonable degree of confidence in such matters before it can commence proceedings to support and make out any allegations of contraventions. There is clear law that injunctions that have the effect of ending a business, as such an order would in practice have done, represent a drastic remedy, likely to cause significant damage to all those involved. It is an action not to be taken lightly and only with the strongest of evidence and reasons, usually entailing fraud, which is a very high bar to establish. Even where fraud has been established, a court can still be reluctant to intervene. This has occurred in a federal court matter, indeed in the last 3 months. In 2017, there was no evidence of fraud. We took the view that our stop order power would have an immediate effect of stopping use of the defective PDS to sell units, which was the immediate problem, clearly within our jurisdiction. As events developed, and ASIC became concerned that the scheme may actually be insolvent, in early 2018, ASIC focused on gathering enough evidence to pressure Theta as a responsible entity to close the scheme down or to obtain court orders if necessary. We remain of the view that that was the right thing to prioritise at the time. Regulators do not take the decision to shut companies down lightly. The appointment of liquidators to a company is an extraordinary step for a court to take. With the benefit of hindsight, we would have more closely engaged with the responsible entity on whether our concerns with the PDS were addressed. We may well have stopped the replacement PDS. ASIC could have done things differently, undoubtedly. I'm sure we'll come to some of those things in the course of your questions. However, no regulator can be held to a standard of perfection. Judgments must be made on the information then available and resources allocated in accordance with the competing priorities we always face. To that end, I asked the committee, I note that between 2017 and 2018, ASIC was supervising 3,600 other schemes and more than 6,000 other AFS licensees. Over that period, ASIC was also dealing with over 10,000 other complaints and reports of misconduct, together with around 4,000 breach reports. Also, ASIC's targeted surveillance activities continued, as well as a number of administrative actions, together with running around 41 investment product-related court cases. Can I be very clear with the committee? I'm not here to make excuses for any missteps. I'm merely asking the committee I'm trying to provide you with some perspective. We look forward to taking the committee's further questions. I know it's been a very difficult day and a half, Chair. You've heard a lot of very challenging and disturbing evidence. I understand that, and we're here to answer any additional questions the committee might have.
Yeah, and I might, with your indulgence, Senator Pratt, I might just start off with some questions which arise from the answer to the question on notice, which I asked in relation to the PDS. And first, can I just thank the Commission for responding so promptly to that question on notice with the detailed answer. That's been most helpful in terms of the conduct of this inquiry. So I do warmly thank you for organising that, Chair, and everyone who assisted in that regard. So leading these questions, and if you've been following some of the evidence, Chair, and a number of stakeholders have referred to whether or not ASIC should have a role in terms of ascertaining whether or not a proposed scheme has commercial flaws or not prior to it being allowed to be registered and progress. And I've raised concerns with respect to how practical that is and the sort of onus that would place on the regulator. Others may have a different view, and you might hear that view during the course of these questions. From my perspective, a key point in this timeline is when the statement of concerns was prepared, that 15-page statement of concerns, and that was issued to Theta. And when I go through that statement of concerns as someone who's been involved in preparing offer documents and prospectuses, and as you have, and as well as in your regulatory capacity, I look at that list of concerns and the nature of the things which are covered, everything from conflicts of interest to how the returns were characterised, to the failure to disclose risks appropriately. And that, to me, when taken as a whole, suggests that you were dealing with a scheme, or ASIC, I should say, was dealing with a scheme, which at that point in time had all the hallmarks of either A, being operated by individual stakeholders with oversight from a responsible entity that were just chronically failing to discharge the minimum standard in terms of a PDS, or B, were choosing not to comply with the requirements and obligations in relation to a PDS. So either they didn't have the capacity to be doing it, or B, weren't interested in doing it. They just wanted to get the money in, get the product out. And in that context, I asked myself, well, at that point in time, at that fork in the road, should this have been allowed to continue? Realising, as you've said, that can have catastrophic consequences on a business. But at the same token, the failure was so material going to the heart of this transaction. It raises questions in my mind as to whether or not at that point in time it should have been closed down. So I'm interested in your response to that.
Yeah, I'll give you some broad reactions, and then I'm going to ask Rhys Boland to give you a more technical response. I think this goes back to what I said a moment ago about context. And I really asked the committee to think of the word hindsight. During the 2017, we didn't have any complaints that the product wasn't working at the time. There's no one banging on the door. And in fact, one of our concerns with these kinds of schemes is that a lot of the time, if we intervene too soon, those who are involved in the scheme, whether the investors or by whatever name called, actually oppose ASIC's intervention. So we need to be very careful to sort of get involved when the circumstances are reached a point where that intervention, from our experience, and certainly my experience, would warrant it. So at that moment in time, the PDS was deficient, and we dealt with that. Now, I think what happened afterwards, as I tried to say a moment ago, I think we could have moved more quickly in the 3 to 6 months later. We could have asked more questions and perhaps brought the issues that led to the demise of Theta forward, if I can put it that way. But in terms of our process, at the time, there were several other collapses that the office was looking at in Western Australia. In fact, regrettably, involving much larger sums of money, very well-known ones. The Chris Marco unregistered MIS, the Macro Pilbara scheme, Veronica McPherson matters, all of those collapses, they're all being dealt with at exactly the same time when this came in. So there was a lot going on, and I'm not trying to make excuses. So to answer your question, when this PDS came to our attention, we had lots of concerns with it. But I'll just ask Rhys Boland to give more of a technically coloured answer, because it is it's a good question, but I want to put it in a proper context.
Was West Point on your list of relevant collapses you were dealing with?
Well, they're just a couple. The Chris Marco unregistered. Yeah.
West Point, of course, has links in with some of the people in this scheme, and I wondered, frankly, whether that should have had more alarm bells ringing because you were absorbed in those other schemes.
Well,
anyway, I'll leave you to answer.
No, Senator, I'll take that question now. I'll take that question now with your leave, Chair.
Sure.
Thank you. The ASIC's been at this since the late 90s. There have been a long list of failed schemes around the country. We can come to that. At that moment in time, there were just 2 that we were dealing with in Western Australia. Now, clearly, I understand the premise of the Senator's question, that it does go to resources and when we can intervene. We cannot be everywhere at once. And it's all I'm trying to say. I'm just asking for a realistic perspective. At that moment in time, as I say, regrettably, there were 2 other collapses involving far more extensive losses and more victims, terrible stories. And yes, we're not insensitive to the potential issues with these schemes, but we just can't be everywhere at once. So as I say, I really want to stress to the inquiry, I'm not trying to make excuses. I'm just trying to encourage realistic expectations, if I can put it that way. Sorry, Rhys, could you just give the chair or the committee just a short, sort of a more technical response to that question, because it is a question I think we do need to deal with.
Thank you, Chair. So Rhys Boland for Hansard. So Senator Scarr, the notice of concerns is part of the procedural fairness process when we have an interim stop order and we're contemplating a final stop order. It is detailed, it is 15 pages. As you say, it lists quite clearly what our concerns were across the 3 PDSs that were at issue. The system we have means that we stop the PDS if we have grounds to, and the delegate who's independent of the operational team agrees. That doesn't preclude the operator from consulting legal advice, from considering their position and the structure of their product and making a fresh attempt to prepare and issue a compliant PDS. And our system gives entities a second chance to do that. The law is quite clear that it's the then PDS that stopped, and it's the responsibility of the issuer to then decide what steps to take next, whether to discontinue the product, and that is what sometimes happens, or with the benefit of professional advice to prepare a new PDS, and it's their responsibility to ensure that that is adequate and compliant, and that's the route that they chose on this occasion.
And so thank you for that. And I just want to emphasise that I'm acutely aware that we have the benefit of looking at this with the benefit of hindsight, and I'm acutely aware of that. And I'm acutely aware that there is an issue of scarcity of resources. So I'm also alive to that, Chair, and I'm really asking these questions with a view to teasing out in my own mind whether or not there are other levers that should be available to pull at particular times. And that goes back to the questions I raised during your first appearance around the registration of a responsible entity or a managed investment scheme and the thresholds that people involved in such scheme should have to meet in terms of being fit and proper persons. And this is another, from my perspective, moment when obviously a considerable amount of work went into the preparation of this statement of concerns, and whoever prepared this, from my basis, just looking at it, obviously undertook a very thorough job. So at this point in time, there's the question in my mind as to what action should have been taken. And that, of course, is dependent upon what action you're able to take under the Corporations Act.
And Senator, the other aspect of that, and it's been touched quite a bit, we talk about the system and how the Corporations Act works around this. It's very nuanced. I said it earlier, but there are several thousand schemes in effect at any one time, and hundreds of responsible entities. So the system, and I'm not here to be an apologist for it. I'm just trying to be objective about what it is and doing our best to administer it. And I think the bottom line is we live, the policy settings with the Corporations Act is to encourage business, is to encourage entrepreneurial behaviour, to encourage a wide range of investments for people to invest in. And so I think it is fair to say that it's a relatively low bar, given some of the issues raised in this inquiry. I absolutely accept that, to be able to register a scheme and to register as a responsible entity. And then what the system does is it makes it easy for people to get involved in these things. And then when things go wrong or could go wrong, or there's some surveillance thereafter, you can't go straight to an injunction. That's not how the system doesn't contemplate that. As Dr. Boland was saying, it has the settings are encourage investment, give consumers or investors the widest possible range of potential investments, encourage risk taking, within a framework, and where we draw some lines, as I think the Senator Steele John mentioned earlier. I think that's actually a very good way of putting it. Where you draw the lines, I mean, that's a tough question. I mean, that really is a question for the community, for Parliament. Do we make it harder? Do we constrain the range of products or investments, particularly retail investors should have access to? Or do we do what we do at the moment, which, it's a pretty wide variety of stuff out there. And what we're relying on now, which is a very recent thing, and I know this has been mentioned as well, are the design and distribution obligations. And they're very helpful. They require issuers and distributors to take into account the interests of consumers and avoid detriment. But it's still after the event, right? You saw the whack-a-mole, I think as one journalist put it. So anyway, I'll stop there because I know that there may be other questions that the committee will want to ask.
I did want to ask some questions in relation to, again, I'm just keeping my questions to the answer the question on notice, and then I'll be giving the call to Senator Pratt. You provided this guide which was provided, as I understand it, to ASIC staff when they were asking, they'll send out to ask investors what their experience was in relation to this managed investment scheme. And this notion arises around asking them if they're happy with the scheme. And I think, Chair, you use that expression, are you happy with the scheme? And I'm left to reflect on the phenomenon that potentially we have here of an extraordinary complicated scheme. And whilst the participant has the benefit of the roof over their head and they're living in their residence, they have no reason not to be happy.
That's the problem.
It's like,
that's it. That's the problem.
And they were told that money was still there.
And so it's like I'm sure if you went to the passengers of the Titanic in the main dining room and said, "Are you having a pleasant journey?" they would say yes. But the fact of the matter is there still isn't enough lifeboats, so it's a tragedy waiting to happen.
Well, I think the issue, in my experience, and when I first started working at ASIC, one of the first things I had to deal with was a scheme like this. And I said on Tuesday that there's a human element to this. When people are given an opportunity to invest in something that they find very attractive, they really like, and they see this as being a good thing for them and their families, and they invest, and it works for a while, then I think it's in the nature of human affairs to say, well, this is what I wanted, it's what I thought I was going to get, and they're happy with it within reason. And so then someone comes along and starts questioning, is that really are you happy with that? And if things are going smoothly at that moment, it's very hard for someone to accept, well, you're trying to disrupt the decision I've made. I gave it thought, it's what I thought I was getting. I hope the committee understands where I'm coming from in making those observations. And then ASIC or a regulator comes along, he might have some complaints, it might have some concerns, and it's very interesting what then happens. Sometimes for those, I'm sorry to have to keep using the word investors, but I think it is appropriate. For those investors or people who've participated in that scheme, if things are going well, they don't want someone like me or ASIC coming along and telling them they made the wrong decision or that they shouldn't be enjoying what the returns they might be receiving or whatever the benefits are of their investment. So sometimes, a lot of the time with these schemes, there's a real ambivalence, I think, on the part of investors to having to face a reality that they didn't expect they would ever have to face. And so we part of our job is to navigate that, to figure out what's actually going on, what's the actual harm, who's going to help us prove it, and how is that going to work itself through. And I keep stressing, I'm not trying to make excuses. I'm just trying to sort of give the committee some colour about the complexity of these things. And it's terrible when this is going to keep going on, Senator. If history tells us anything, there'll be more collapses next year and the year after. That's the way the system is not designed to work necessarily, but there will be more problems in the future because the system, encourages risk taking, and how we manage that risk, even with these new reforms, is going to be interesting to see. So I think the committee's got some, very significant issues to grapple with, I think, with all due respect.
Oh, I absolutely agree. I've got one more question, then I'll pass the call to Senator Pratt, and that is, again, I go back to this investors' questions document, which is annexed to the answer to the question on notice. And question 13, I quote, have you asked Sterling to end the arrangement, i.e. terminate your lease, return your money, etc.? And if so, what have you been told? Would you like ASIC to assist / help you with this? ? So that end quote. So that to me indicates that, and I acknowledge this is a difficult situation where people have invested on the basis of a PDS prior to it being amended as it should have at the start of been done. But ASIC investigators are then asking potential holders of these long-term leases, have you asked Sterling to end the arrangement? Would you like ASIC to assist or help you with this? As if during the course of the investigation, the investigators were actually inquiring as to whether or not the people who had these leases for life, they thought, needed assistance to get out of the arrangements. And I'm just interested to, if you're in position to provide further context to that, and whether or not ASIC did in fact assist anyone to actually get out of the investment.
I have to say, from my perspective, that's a very straightforward question to ask in an investigation or inquiry into a scheme of this kind. I mean, look at it from ASIC's perspective. We don't know. We weren't there when investors made their investment, or the tenant investors actually wrote the check. We weren't there. We didn't even know that they were putting money into this thing. Time goes by, and we know there's a chronology, and there are questions about what we did and didn't do. So we start investigating. Well, we have to ask, don't we? We need to know, well, how do you feel about your investment? I mean, are you... So
Chair, if sorry to interrupt, but if you would ask me that question as an investor, and we know that term is a bit of a lightning rod for those who participated. So we'll say, if ASIC investigator knocked on my door and said, Mr. Scarr, are you happy with the arrangement? And I'll say, well, I think so. Shouldn't I be? And then the question is, well, have you asked Sterling to end the arrangement, i.e. terminate your lease, return your money, etc.? The immediate thought in my mind would be, oh, no, I haven't. Should I? Yeah. And you're going to help me to extricate myself out of this. Well, I'm trying to work out...
I think the conversation is a bit more nuanced than that.
Senator Scarr, it's Kathy Armour here. I think the context of question 13 has to be read in light of question 12. So if you think in the chronology, there are issues around the solvency. We were concerned about that. But Sterling has informed investors of a change in evaluation of their unit. So we were trying to find out whether that was a surprise or a concern. We didn't know what the risk appetite of the investors were. So it's more in the context of what was occurring that question came. And so I think the context does help understand the formulation of the question.
But do you understand, Commissioner Armour, where I'm coming from? If someone approached my mother and asked her that question in that context, I'm not sure what she would say because, and I'm not sure
that's a point.
One should reasonably...
That's a point, actually. We're calling investors because we are the corporate regulator and we're looking at the investment. We have some questions about it. We want to know what she might say, and if she's befuddled, actually that's quite useful for us to know because that helps to explain the situation of the investors to us.
But maybe she's on the Titanic and she doesn't realise that. And
exactly, but
we don't know that either.
She may not realise that, but we don't want her to stay on the Titanic for longer if she does want to question it. There's no benefit for anyone for us not getting to the question about is there an iceberg? We need to get to that.
Right.
I have to say, Chair,
I think you understand the point I'm making, Chair. It's a difficult issue. I hope you appreciate where I'm coming from.
No, I do. I think all I would say is from an investigation inquiry perspective, we have to find out what happened. We need to find out how people feel about what happened. and whether to what extent they're happy to work with us to figure out what happened. And remember, when we go into these things, it's our duty to be open-minded, to be objective, to work things through.
Okay.
So I sort of understand what you're saying in the premise of your question, but I think what Commissioner Armour is saying also makes sense, that in the context of that kind of call, what I would say, and I think this is probably maybe what you're getting at with respect, is, you know, if I'm an investor or a tenant investor or a person in the situation of one of the victims of this collapse, and I get a call from an investigator who I've never met from the corporate regulator, I personally would find that a bit confronting. That I get. Yeah. So if I'm at home and I get a call from someone I've never heard of, and I'm from the corporate regulator, it's a bit like getting a call from the police or something. You say, well, you know, why do you want to talk to me? And so I understand that, and I have sympathy for that view. All I would say in response is, and I'm sure the police and anyone who's in law enforcement has this experience all the time, we have to talk to people, and we do our best to do that in an intelligent, sensitive way. I'm not saying we're perfect at it by any means.
Okay. All right. I'll give the call to Senator Pratt now. Thank you.
Thank you very much, Chair. Can I ask which team in ASIC received the complaint from the WA department? And who was it referred to? Was it referred to enforcement? And if not, why not?
Well, there was a meeting with officers of ASIC with the department, and I think our team looked at that. It wasn't referred to enforcement.
No,
Yes. Yeah.
Senator, so it starts with our assessment team. Any of the 10,000 complaints and referrals each year, by and large, start with that team, unless the officer had a sort of a direct contact elsewhere in ASIC. They did the initial assessment. It was then referred to one of the supervision teams. In this case, the investment management and superannuation team. That's the team that supervises the managed funds industry, the 3,500 products currently at large in that sector. And it was later in the chronology that the enforcement team got involved. That's partly just internal sort of operating model.
Did they consider the tenancy aspects to that investment when referring it to the managed investment?
Sorry, could you please repeat that?
Did they consider the tenancy aspects of the product?
They considered all of the information we had. I think it's fair to say, as we've said in our submission and the Chair's opening statement, we did focus on the product which was within the scope of the Corporations Act, which was the financial product. That was the focus, but we looked at all the material that the victims were given as part of entering into the arrangement.
But wasn't it the tenancy issue that caused this issue to be referred to you from the WA department?
I wouldn't entirely agree with that characterisation.
But they did raise with you the extent to which it was pulling in tenants, and that they had these two intersecting products.
Look, if I understand the question correctly, yes, the WA regulator was interested because of the tenancy, and they got ASIC involved because of the overlap with the financial product.
No, well, they couldn't come to grips with, they couldn't manage the tenancy aspect because it was a financial product. Yeah, pretty much how it's been put to us.
Yeah, I don't think that's, yeah, there might be some confusion there, Senator.
Senator Pratt, wasn't it the other way around? They basically saw it as a managed investment scheme primarily, and there was a tenancy tenancy agreement associated with it. So they thought, okay, it's a managed investment scheme, we refer it to ASIC.
Yes, that's right. But ASIC needed to deal with it, including, therefore, you needed to look at it inclusive of the tenancy rather than pushing the tenancy stuff back to the WA department.
Okay.
In terms of the order for production of documents from the Senate, when those materials will be available, please?
I understand it's being tabled today. We understand Senator Hume is tabling some documents today with the Senate.
I had hoped that we would be able to speak to you about those documents and that we would be able to consider them before closing off this inquiry.
Right.
You're able to make yourself available again once we've had a look at them?
Yeah. I'd be very happy to be of assistance to the inquiry in any way we can be. We understand they're being tabled today. That there were reasons why there was a perceived delay from your perspective, Senator, but we understand being tabled today. And of course, we'll do whatever we can to help the inquiry with any questions it might have once it's had a chance to look at the material.
When did ASIC commence interviewing witnesses after receiving the complaint from the WA department?
It's up to the middle of 2018.
Approximately June 2018, Senator.
And the referral came from March 2017.
That's right.
What steps did you take after the complaint was made, or the concerns by the State Department were made?
Well, we've outlined those in our written submission. We looked at the PDS.
And I'll revisit those. Can I ask, was it the initial ASIC team who dealt with the stop orders relating to Sterling, financial services, managed investment schemes?
I'm not sure what the question is. Sorry, Senator, could you repeat that?
Who dealt with the stop orders relating to Sterling? Which parts of ASIC?
Investment management team.
Investment management team. At which point was the ASIC enforcement team informed about this complaint?
I think early in 2018. We commenced an investigation in May 2018, as the chronology says. So as earlier evidence has shown, we were looking at the PDS, we looked at the replacement PDS, we were looking at other material. We didn't commence a formal investigation and take the matter to the next level, if I can put it that way, until early in 2018. Now, I understand the committee's concerns about whether we could have moved more quickly in that respect, and with the benefit of hindsight, perhaps we could have moved more quickly.
Okay, so
Looking at the PDSs but I should note that when we first, with the first stop order on the first PDS, there was a media release where we informed people of that, and the Sterling name and brand was in that media release. And I think one of the learnings from this is perhaps we should have been more aggressive or about publishing or publicising that media release to bring to people's attention the first stop order. But I keep reminding
as you know, many investors that lost money post that point.
Yeah.
Going back to the broad brush picture that was being painted before, where we encourage products, a diversity of products, and that inherently involves, therefore, a level of risk. Surely, if we're encouraging that level of risk in the marketplace, it means that without hindsight, because of that level of risk that we acknowledge is embedded in it, it means we need to be extra aware and ready to jump on things like a defective.
Yeah, I'm not sure I would characterise that's the way the system's intended to work. The system encourages a wide range of products, as we've said, and they, through managed investment schemes, and we have a system of responsible entities. Now, I think the system assumes that when people invest, they know they're taking on risk. It's a disclosure-based system, and I don't think the system doesn't expect the regulator to be there, sort of monitoring the performance of all of these managed investment schemes and whether the risks that investors take on prove to be wise or unwise investment decisions. I don't think that's the expectation of Parliament. And may I say with respect, it could not have been the expectation of Parliament because there are just so many of these schemes involving. So in order for ASIC to be monitoring the performance in each and every scheme and following up each and every concern of each and every scheme to the nth degree, I think that's quite an unrealistic expectation. And
look, I'm happy as a parliamentarian to cop the blame, part of the blame for what's happened here. I note there are many.
I wouldn't see it that way. I think it's a blame thing.
But there have been many reports that have called for reform in this space over many years, and it's only recently that these product type rules have changed and parliaments have failed to act.
But sorry to interrupt, Senator, but I would also add that the basic system we've had came out of the Wallace inquiry in the late 90s. It hasn't changed much in over 20 years. And there have been other inquiries along the way, exposing issues of one form or another. And so with respect, I agree with you about that. But on the DDO, I think that is a very significant reform. But the underlying system that you and I are sort of just talking about, that doesn't change. So it's still a system that makes it fairly easy for new products to be promoted through managed investment schemes. So the DDO is sort of an after the event reform. It's a welcome reform, and it could very well have made a difference here, but we don't really know for sure because the DDO process, still a process, still requires evidence, still requires procedural fairness, and will take some time in particular cases to work. We welcome the reform, but one has to be realistic that the underlying system hasn't changed.
Does ASIC consider the Sterling matter is a case of serious or material non-disclosure risk to investors? And at which point did you become aware of that material non-disclosure risk?
That's the stop order.
Yeah. The first stop order would be I think your question was a bit slightly more fundamental, but I think the other part of it, I think the short answer is when we issued the first stop order would be sort of the marker on that point. I think I hope that's helpful. You may want to take that a bit further if that doesn't.
Okay, so I note that
when you say the first stop order, you're not referring to the stop order that you brought to our attention.
No, I'm talking about the 2017, September 2017. Yeah.
Right.
And so at that point, did you at any stage brief Queen's Counsel as to whether there were concerns about risks to investors on compliance with the Corporations Act? Things like
Senator, we would never do that in those circumstances. There was no basis whatsoever to do that. As I've tried to explain how we administer the system, at that point in time, the issuing a stop order was the appropriate thing to do in the then circumstances. I know the committee's heard some evidence from another witness, rather extravagantly expressed. I respect his ardour and enthusiasm, but with all due respect, there's no basis whatsoever to go off to a Queen's Council in August 2017.
Okay, so whose job is it then to work out, based on you already had a stop order? How are you supposed to review? How do you get to the point where we know that there are deceptive and misleading statements?
Well, at that stage, the
15% return.
I might ask Dr. Bourne to help me with this.
Are those the fact that they were sold
It's a lawful scheme. We're not at that moment in time. The scheme's continuing. We've issued a stop order for that PDS in 2017 in September. A replacement PDS goes onto the market, and then there's a period of time from that moment until we commence an investigation and take proceedings against Theta. And I think there's a legitimate question in there about whether we could have moved sooner. But I think the premise is the scheme was operational. It was operating lawfully at that point in time, based on the material we had and based on the way we normally deal with circumstances of this kind, having regard to the fact there are a great many other matters at that moment in time that ASIC is dealing with. So,
okay. So when did you conclude that you did need to investigate?
Senator Pratt, can I just ask one question that immediately follows from that, if you give me this indulgence? And I'm interested in this point that you issue the interim stop order 9 August 2017, the final stop order in 29 August 2017. So then the new PDS is issued and the scheme continues with that new PDS. What about, so what about, and I don't know the answer to this, but what about the people who elected to join the scheme, participate in the scheme, entered into the long-term residential tenancy arrangements under the PDS prior to it being amended and modified? So they've engaged in the scheme under a deficient PDS. Is there any power, and I don't know the answer to this, but is there any power for ASIC in that situation to say to the promoters, the responsible entity, you need to go back to each of those people, advise them what the deficiencies were in the PDS they were given, and give them an opportunity to decide whether or not they want to exercise a right to exit on the basis that they were given deficient disclosure?
Well, you can take that.
So that's a good question. The stop orders public, the media release was a deliberate transparency and publicity about the fact that there had been a defective PDS and that ASIC had taken action. There were a small number of complaints to AFCA from people who had...
Canberra's a long way from Perth, so Sydney.
Sorry, Senator.
No, sorry,
That's
just
right.
please continue.
Please continue, I apologise.
It's okay, please continue. Yeah.
So the stop order was in place, the stop order was publicised. Some tenant investors did then take a complaint to AFCA, as they're entitled to as the dispute resolution body for any matters around managed funds and investment products, and a small number got a refund, and then the broader issues came with Theta's going into administration later on. I guess in an ideal world, Senator, we would have a situation where we can oblige firms to remediate following any kind of defective document.
I think the Senator's saying something, maybe not. Speak up a bit.
Just continue, please.
So yes, we don't currently have a power to
directions power.
Clearly direct sort of remediations. That is something that has been discussed in previous reviews. But yes, as the chair said, perhaps we could have done more to make sure more people saw the stop order, but we did we did deliberately publicise it for that reason.
So I guess my question's looking at the lack of power you've got to actually direct that remediation, because it seems to me if you want to put someone in the same position that they should have been in with the benefit of
PDS, yeah,
of a compliant PDS, then the way to rectify that is to advise them, this is what the PDS should have said, this is how the PDS you were given was deficient. You now have 28 days to elect whether or not you wish to continue to be part of this.
And Senator Scarr, the review into ASIC's enforcement powers, which was conducted by Treasury and a broader group, actually recommended that ASIC have a broad directions power, and I understand that recommendation had been accepted as from the review, but that power has yet to be legislated.
Okay, all right. Okay, back to you, Senator Pratt. Sorry to interrupt. I just wanted to tease out that point. Thank you.
Thank you very much. In the context of what led, therefore, to the investigation, if you weren't taking action to investigate on the basis of the defective PDS?
While during this period, we were looking at Theta's financial statements, or lack thereof, or gaps in them. And so we were focused, I'm sort of summarising here, Senator, but I'll ask Rhys Boland to give detail. So towards the end of 2017 into 2018, we were looking at Theta quite closely, but from a solvency perspective.
And what drew you to look at Theta from an insolvency perspective rather than from the defective PDS stuff?
That led us back to the PDS. So I'll ask Rhys to elaborate on that, how the two came together.
So the stop orders in August 2017. In September 2017, the financial statements of Theta come to us and they're qualified, and there's a going concern qualification in the audited financial statements. And as it becomes or begins to become concerned, we do more analysis for that, that there may be a solvency issue in addition to the defectiveness of the PDS. The formal investigation, as you can see from our chronology, starts the next year, but conversations between the supervision team and the enforcement team have already started at that point.
And what feedback was going back to the department in Western Australia?
Just on that, you'll find that description on paragraph 159 of our submission.
Thank you.
On discussions with the department, I don't know.
So I understand there were regular conversations between the ASIC team and the WA agency. I can't give you kind of timings or particular dates and times. If you need more detail, we can come back on that.
At which point did you pull together the factors of the scheme being complicated, it targeting vulnerable investors, the PDS being out of touch with the realities of returns? At which point did you realise that as a result of these products, people's tenancies and their underlying investment would be at risk?
I think that emerged over a period of time.
Yeah, so Senator, we certainly take in our submission, take you through the chronology about the evidence we collected from a period of in early 2018 till May 2018, when we commenced the formal investigation, which allowed us to use more of our investigatory powers. But in that period, we collected evidence, issued notices, collected material, and built up a picture.
Did you see any signs of hope at that point for these people's money?
Well, Senator, as the regulator, we don't have the visibility to be looking into the detailed performance of individual investments for individual tenant investors at all material times. We just didn't.
I understand that. I'm really
so the picture emerged, and we moved. I do accept we could have moved more quickly along the way. And as Reece says, one thing in particular that I take from this, and I think we would do that differently now, is being expansive and about publicising, stop orders. I think with the benefit of hindsight, I think more effort should have gone into getting the message out at that point in time with that particular stop order.
What kind of demands did Theta and or Sterling demand for procedural fairness, for example, when you were asking them to amend the PDS, etc.?
Well, we just followed the process. We follow a procedural a process which leads to fairness. And so the system doesn't.
But who's asking you to be fair to them if they're just going to seek to get away with it for as long as they can?
The law. Yeah. Even people who are accused of crimes we have to follow the process.
No. But surely, therefore, you jump in as quickly as possible. You don't have to wait for evidence. You can go to someone and say, hey, we need to clear this up with you quickly. It's private until then. And it can be cleared up.
Still need evidence,
Or people just fall over and fight back, and then you've got a problem. Why do you just wait for the evidence?
The consequences of us acting without the evidence and issuing a stop order could have been quite drastic for a managed investment scheme, because it can't continue to raise money, and it's raising money for a purpose. So we need.
I'm not suggesting at that point you could have issued the stop order. I'm suggesting that you should have, put to Sterling some of these issues and accelerated your investigation by talking to them.
The way the system works is that we issue an interim stop order, and then we have a period of time to finalise it. So we acted as quickly as we felt we could to issue the interim stop order.
And what evidence did you need for the interim stop order?
We certainly needed some basis to believe that there were misleading statements, and so we conducted inquiries to determine that we thought there could well be deficiencies with the PDS. Then, once we issued the interim stop order, we issued the notice of concerns, which is a 15-page document, which gives then the opportunity to tell us any manager the opportunity to tell us if we're wrong or to contest what we've said.
And did they tell you were wrong and contest what you had said?
On that occasion, no, they accept that stop order. They've given the opportunity to be heard, but no, they
rewrote it.
They acknowledged that there were concerns, and as Chair Longo said, they went back and a couple of months later rewrote their PDS, revised.
And was the new PDS, did it still contain the same kind of inaccuracies?
So the new PDS was one of the PDSs subject to our eventual civil penalty action. So the federal court did a couple of years later conclude that PDS also had some defective elements as well.
So did you ever, do you think in the context, what were they supposed to say to you? Well, were they supposed to say, we can't fix this, our business model's broken? Do you expect them to tell you that, or do you need to tell them that?
it goes back to a more fundamental point, Senator. The business model is theirs to get right, and the PDS is theirs to get right.
We don't arbitrate on that.
So,
who's regulating them if you don't arbitrate on that?
We don't regulate the performance of managed investment schemes. We don't regulate whether or not.
No, I understand that. That's been well established in the course of this inquiry, but I can't see how you can regulate a PDS and push the onus back onto the company to make it accurate.
That's how the system works.
Acknowledge that their business model is unviable and they're just going to keep.
I think it might turn on the word regulate. PDSs aren't even filed with us. In fact, the first page of this PDS says that ASIC doesn't approve it. If you go to the PDS, it's standard language on the first page that ASIC doesn't warrant any part of the PDS. It's up to the people who produce the PDS. It's their document. It's their responsibility to get it right. That's the system. And of course, the regulator gets involved. It's sort of a game of whack-a-mole. I think a journalist put it earlier in the week. Facts and circumstances come to our attention that lead to a breach of the law, and that requires evidence and due process. And we can't, and even so, we can't be there for everything, for every scheme that goes bad. We try to be, but at that point, the harm might have already been caused because the business model and what goes in the PDS, that's the responsibility of the people who are pressing or promoting that scheme.
So essentially what you're telling me is that there is no lever here that anyone could have pulled to get involved in what was going on here before they became insolvent.
Until there was evidence emerging of insolvency.
Or potential insolvency.
Or potential insolvency or misleading and deceptive conduct. Now, things starting to go wrong in a way that could be established by admissible evidence that we can use in court. And I might add, in circumstances where there are lots of matters coming through ASIC's office, and we have to make judgments about which of them, to resource for further inquiry or investigation. And we don't always get that right. Sometimes there are matters we should be giving quicker attention to. Sometimes we miss matters. Sometimes we get accused of intervening in matters too quickly. Yeah, so it's a again, I'm not trying to make excuses.
Senator, though, the qualified financial statements were a trigger point for us here, and that was.
That's right.
That really drew our attention to it because, as you recall from our previous evidence, we weren't receiving complaints from third parties at this stage, but we had concerns and we issued a stop order about the PDS, and then we got qualified financial statements in relation to the trust. So that triggered the action.
So the financial statements triggered the action. Did you go back and check financial statements from previous years?
It became immaterial to the job we had to do. The job we had to do was to address the financial situation of the trust at that time and consider whether or not there was an issue that needed to be addressed. And then we worked with the responsible manager to actually wind down that trust.
Was ASIC enforcement informed about information in relation to the Sterling Group between the 17th of March and 27th of October 2017? At which, I think we've slightly covered this, but I just need to get it straight in my head. At which point did enforcement get involved?
So the enforcement exercise was largely managed from our Perth office, from our team in our Perth office.
Yeah.
And they are aware of, broadly aware of the things that are occurring in the WA market at that time. The formality of the commencing an investigation, we cover that in our submission of paragraph 165. We formally commenced an investigation on 29th of May 2018.
Thank you. And I'd like, please, if you can provide to the committee a copy of the Section 13 ASIC file note and documents that refer to the matter of enforcement or to commence the formal investigation, if I may.
If we do that, we may need to consider whether that needs to be confidential.
Yeah, I'm happy for it to be in confidence. Yep. That's fine. At what point did ASIC obtain information about the money flows behind the scheme?
That would be during, at the very least, during the period of our investigation. But I don't know if
that's definitely a work in progress. The liquidators all of it.
So I think, Senator, it's from the time of the qualified audit report.
Qualified audit report. So was it material to you finding the PDS to be misleading? That the fact that monies weren't flowing according to the marketing or the PDS?
I think there's a conflation of concepts there. Do you want to go over our financial reports?
I know I'm conflating them, but I'm just trying to move quickly.
So to form a view about whether the PDS is defective, you need to some extent analyse the product that the PDS is trying to explain. So there would have been some analysis of the underlying product and how it generated the returns that it said it was going to generate. That, I guess, the financial analysis became a whole lot more detailed, and we required a whole lot more information from both the operator and the auditors after we received the qualified audit report.
Okay, but it would have been apparent quite quickly, therefore, that the money flows the PDS didn't match the money flows.
It does would not appear from what Reece Boland. When you say, I'm sorry, Senator, when you say money flows, I'm not sure I follow what you're getting at.
Well, for example, people were told their money was in a trust, except that it was actually being rated to, pay their rent.
Yeah, but that wouldn't be in the.
The Sterling Income Trust was a trust, Senator.
Yeah.
And at least as the documents we've seen in relation to the rental agreements, directions were given by investors for the proceeds of their investment to be applied towards the rent obligation.
And even for redemptions of capital towards their rent as well. It's in the documents we annexed to our response to your question on that.
Yes, I can see that. Do you think investors were aware and tenants were aware? They literally thought that they were buying a lease for life and that therefore that would last all of that time.
Well, that's the idea they were sold. So when they signed up, my understanding is the documents made it clear that the payment of rental would come from the income that was generated, and I'm sorry to have to use the word again, of the money they invested in this managed investment scheme. So I know heard very troubling evidence about people being confused about what was going on, but the method used to pay the rent was a bit unusual. When people usually pay the rent, they pay from their own resources and cash flow. But on this occasion, the rent was paid by a third party by virtue of an investment in a set of complex structures. And I accept that a lot of people didn't appreciate that's what was going on, but on the face of the lease, that's her position. And we can sort of talk about how that people managed to be persuaded into this situation. So when we talk about money flows, what's running through my head, Senator, is there's a lot to talk about there, because there's the payment of the rent,
Yeah.
So that's a kind of money flow. And then it seems to me, if I understand your question correctly, because I think it's a good question, is the money flows within the corporate group, within the trust structure where the investments were being made. So there's money flow there too, right? Employees are getting paid and expenses are being paid to run the business, and there are other rentals being paid. So there's all those kinds of money flows. And the money from investors, from the victims of this thing, was going into this business model, if I can put it that way. I'm trying to find a neutral word, into that business model. And I think your question is saying, well, where did all the money go within this complex business model? And so bringing it back to what Reece was saying earlier, the auditor, he or she gets access to the accounts at a certain level, and it's his or her job. They're an auditor, and he or she was not prepared to sign off. He wasn't convinced that the accounts met the accounting standards, Reece.
Yeah.
And so he qualified the accounts, and in business, qualified accounts, that is a problem. That is a potential problem. And so ASIC, I think, did the right thing at that moment in time and started taking a more active interest in the financial reports of this responsible entity. And as we've talked, could we have done more? Could we have done more quickly? That's what we're here to try to cooperate with.
What was the date for that again? I'm sorry.
The qualified audit report we received in late September. It's in that timeline on page 31. Senator.
Yeah, okay.
And again, Senator, qualified financial reports doesn't mean the business is going to fall over the next day, but it is something that needs attention. So again, in business, in the commercial world, you've got to go with what you've got at the time, I think.
Senator Pratt, sorry, Senator Pratt, to interrupt. Just wanted to, you asked a question about interactions between supervisory teams and enforcement. We've just looked at our chronology. At the very least, we've got a record of, there may well have been lots of conversations, but we have a record of a formal process and discussion on the 2nd of March 2018.
Did ASIC ever consider using its powers under sections 1323 and 1324, which are the injunction and preservative powers? I know you have said that you don't agree with much of Niall Coburn's evidence, but he certainly said that he had used those powers seen those powers used when working for ASIC.
Yeah, well, I'm very familiar with those powers. They've been in the legislation since it was first enacted, the very important powers. The critical question is, when can those powers be harnessed? And Niall Coburn's had some experience harnessing those powers when he was at ASIC some time ago.
Yeah.
Now, the critical question, as I tried to say in my opening, and if it's of help to the inquiry, we do plan to file a submission going into the practicalities of the application of the law here. But long story short, the evidence that was available to us at the relevant time, or could have been reasonably available to us at the relevant time, would not have supported going off to court, certainly not with the alacrity and enthusiasm that the inquiry heard earlier in the week, with all due respect, that would have been would not have been successful. But I know the inquiry is grappling with some difficult issues. We will be filing a submission giving examples from recent federal court decisions where ASIC itself was a party, where these principles are discussed. And indeed, in this very matter, the relevant principles were discussed by Justice McKerracher in the last paragraph of his lengthy judgment.
Chair Longo, just in relation to that, and sorry, Senator Pratt, if I can just jump in here.
No, please do.
I am interested, and thank you for foreshadowing a supplementary submission. I am interested in, to the extent that you can tease out the options that were available at that point in time when that 15-page statement of concerns was prepared. because to be open with you,
Yes.
I'm sort of still grappling in my own mind as to what was available to the regulator at that point when you are confronted with such a deficient PDS that, from my perspective, it just raises concerns about what else is going on. What is happening in this situation where the promoters with a licensed responsible entity have produced a document that is that deficient? It just begs the question in my mind as to, at that point in time, what was available. Sorry.
Well, I think that's absolutely the right question to ask. It's the question I've asked myself from the very moment this inquiry was announced. Did we do whatever we could have reasonably have done based on the information we had at the time was reasonably knowable? That's a fair question. It's a key question for this inquiry. We've made some attempt to answer it so far, but over the last 2 days, I think we've teased out some of the nuances and issues that the inquiry is worried about. And of course, we will file a supplementary submission and do our best to address that core question.
Yeah, thank you. Over to you, Senator Pratt. Thank you.
Thank you. So you didn't at any point in time obtain advice from internal lawyers or external counsel on whether any information you had obtained would be used for injunctions to protect investors? Because you're clearly looking from March 17 through to August at those issues. And, we're discussing these things in a very live way as to what options you had available to you. And noting the defective nature of the PDS, was it sitting in the wrong part of ASIC? You could say, could we have done more?
Yeah.
Is it silos inside the organisation that kind of say, well, we've got to take this defective bit of statement and say, well, what lies underneath it?
Yeah, well, I think that's a variation on the earlier question.
Yes.
Just asking Reece if he knew off the top of his head. There are systemic issues here. I don't know how many PDSs are in circulation at any moment in time. They're not registered with us. I don't know how many we're looking at from time to time that are allegedly or could be faulty or not. So in terms of the way a regulator would think about this, it sort of goes to that core thing. Did we do it? Given everything else going on, given the evidence that we had at the time, given the approach we took at PDSs. Now remember sorry, with all due respect, I shouldn't say remember. I'm sorry, Senator. But what I mean is we've had PDSs as part of our system for a very long time. And so in terms of when we see a PDS that may not be up to scratch, so we have all this experience about what to do with that. And so in our supplementary submission, I'll try to elaborate a bit more on what our regulatory approach is, because I can understand from your perspective, and if I may say so, with a little bit of hindsight, to say, well, look, we now know this PDS was, and those that followed clearly weren't up to scratch. We know this because a federal court judge said so a while later. And I think so. It's a legitimate question to say, well, could we have looked at it more intensely or more sceptically and taken more steps. And I think we've been all candid to the inquiry. Inquiries like this, they can be a bit painful, but we always learn something from them. And so we will be reflecting in the supplementary submission about that. We'll do our best. I mean, it's clearly. Yeah. I hope that's not a great answer right now, but I'll do my best.
No. I'm grateful for it. In that context, could you have issued Section 30 or 33 notices to get financial information of companies?
We could and we did.
At which points in time did you do that?
Our submission, Senator, lists quite a number of notices.
Yeah, I'll go back.
There's quite a few.
Yeah, paragraph 164.
Yeah.
from May, 15
Back
May.
to that.
Now, again, in all candour, it may very well be asked, well, could you have done that sooner? So we will
So have a look at
yeah,
59.
yeah, and one.
I think that you'll see that from the time late September that the audited accounts were lodged with us, we
Good point.
quickly got to the issue about whether there was more information we needed. We issued a notice on the 2nd of November. We received a response on the 16th of November. We commenced a thorough financial analysis of this information on the 21st of November. So there, paragraph 159 of our submission covers that. And I think we also address in the submission that when we were thinking about what the actions we could take, sort of foremost in our minds was, were there assets of the trust that would be available? Were there meaningful steps we could take to protect the assets? The difficulty was where in other cases you might be able to do that. In this case, there were these solvency concerns.
Well, and
secured creditors had first.
Worse than that, in failing to take steps, not only did those investors lose their assets, but more investors were recruited to also lose.
And we would have, Senator Pratt, the ASIC officers come to work every day with a view to ensuring investor protection. So I do think we may not be perfect, but the first priority is to ensure that further investors, where we can, don't find themselves in that situation.
Senator Pratt, Senator Steele-John's just got one or two questions he wants to ask before he leaves, and then we had proposed to have another session.
I'll just ask one more then, if I may, before Senator Steele-John, which is, given the acknowledgement of the losses and, the things in hindsight that could have been done better, does ASIC think that victims should be entitled to compensation?
I don't think ASIC, that's a matter for government. As far as ASIC is concerned, we discharged our duties and responsibilities in good faith, and there's regulation is all about making choices and decisions based on what we know at the time. We're not perfect, and so as far as compensation goes, that is not to be at ASIC's door, I'm afraid.
Okay, Senator Steele-John, if I go to you, and then Senator Pratt, we have another segment, as you're aware of, where we'll have to log off and then come back in.
Thank you.
And our witnesses from ASIC, you're aware of that as well?
Yes, Chair. Yes, Senator.
Thank you. Okay, Senator Steele-John.
Thanks, Chair. So I just wonder if I could ask you, Mr. Longo, am I pronouncing your name correctly, by the way? I don't want to be, is that the right way to do it?
You're doing fine, thanks. It's better than most.
All right, lovely. As a Steele-John, I can tell you how annoying it is when people continually don't get that right. So you've been pretty candid with us during your evidence, and you've expressed a number of times that, with the benefit of hindsight, there may well have been things that ASIC would have done differently. Yes. Particularly with the wisdom of the with the subsequent judgment that was the lengthy judgment that was issued. Now I've had, and I suspect Senator Pratt and Senator Scarr, I've had a number of communications and emails and phone calls from individuals that have been affected by the Sterling First debacle, and the level of distress is profound. These are people that feel like they did the right thing, that they try to kind of do what everybody thinks you should do, which is secure your home in retirement, and are now on the verge of homelessness with no clear path of recourse. Putting aside the question of compensation, which may well be it is a question for government and potentially a recommendation of the inquiry, reflecting on where we are now and the role that ASIC played, are you able to offer to the victims of this situation an apology on behalf of ASIC?
An apology. Well, I think the original as Commissioner Armour said, at ASIC we do our best to look out for people who make investments, and I'm now going to use that word. So these individuals tragically made an investment. They signed a lease that was linked to an investment, and that proved to be something that we now all know led to great losses for them personally. I do not think it's appropriate for me, it's emotionally inappropriate for me to say that ASIC should be apologising for that. I think what ASIC can say is that we've tried to respond to the issues that have been brought to our attention. We've tried to act in good faith, we've tried to be helpful to secure the interests of investors. But we now know that the tenant investors got caught up in a scheme that wasn't sustainable. It didn't work. And so I think that's something that we all have to reflect on. Yeah.
So that I'm clear, though, Chair, I'm not asking you to obviously apologise for the actions of those involved in Sterling First. I'm just listening to your evidence. You have acknowledged that in hindsight you could have done things differently, and it is in that context that I'm wondering whether you would feel able, simply and exclusively within the remit of ASIC and what you may have been able to do differently with the wisdom of hindsight, are you able to offer an apology to people purely for that who have lost everything?
I don't think it's emotionally appropriate or appropriate on the facts for me to frame a response to your question in that way. I am prepared to say that in all of the circumstances we've had to deal with, I think, for example, and I've started discussing this with the staff, that when we issued the first, the final stop order in September, August 2017, I think we should have been a lot more energetic about bringing we issued a media release, but I think with the benefit of hindsight, we could have done more to let people know about that stop order. Now, I think that we could have done that, and I'm sure as a result of the work we're going to do in the next few days, we will revisit, as I was saying to the Senator, that we would elaborate on what we've learned from looking at this material. Perhaps we could have moved more quickly. But even so, the losses, of course I regret these people have lost their savings in connection with this mess. But I think that's, I think that's being reasonable. I've offered to meet with the investors in Perth.
I agree with you.
I'm sort of reluctant to sort of just blatantly apologise, because I think that is something that I think is inappropriate in all of these circumstances. But I've offered to meet with investors. I'm happy to sit down with them and listen to their concerns. But I think that is a sufficient response in all of the circumstances.
I think from my conversations with them, and this is something for you to take away and reflect on as you reflect upon your organisation's role in what has happened. I think an apology framed within language that I'm sure your legal department could draft so that you weren't considered to be, on the hook for anything. I think a human apology would go a long way, because not only are we dealing with financial distress, we're also dealing with deep emotional distress. I would also agree with you that you could have acted quicker and should have shouted louder, if I can use that analogy, in relation to that stop order. A media release isn't good enough. And it is good, and I will be glad to see the additional steps you'll put in place to make sure that if in the future you issue one of these orders, you're not expecting people to be sitting there refreshing your media portal to find out. Because if you say there's a stop order on a product, that's a serious call, and the community seriously needs to hear about it pretty quickly.
It's a really good point. It's a terrific point. The challenge for us is that we don't know who's invested in these schemes at that time. So that and that is going to be a challenge that we need to think about how we can deal with. But it is a challenge. It's the as we've said, we don't have those sort of records of a product disclosure statement. So it is something we can really appreciate any ideas that you might have on that. But at that time, the system does not give us that information.
And to use your analogy, shouting louder doesn't mean investors wouldn't have continued with their investment, as I was explaining earlier. But with great respect, there's a true hindsight issue here for all of us. And these schemes, there have been quite a few have failed, even this year and the year before. There are some failing right now in Western Australia. There'll be more failures. I can guarantee it. And so I absolutely regret and feel for the people who've lost their savings in this. But I really I hope, if there's one thing I hope the inquiry accepts from me personally, is that there will be more failures. There will be more collapses. And that is a product of a system that encourages risk-taking and which doesn't prohibit products that shouldn't be, or with the benefit of hindsight, should not have been distributed to retail investors. That's on all of us. That's the system. That's how it works in Australia.
It is on all of us, and I was upfront with Treasury, and I'll be upfront with ASIC in relation to the role that parliamentarians of Parliament play in terms of setting the rules of the system. And there's a lot for the major parties that pass these laws to reflect on in how we got here. Yeah. Can I just ask you to take on notice, because I bet you don't have the figure now, but this ASIC's communications budget, are you able to take that on, or if you have the figure, that would be quite impressive and it'd be great to hear it, but are you able to, if not, take it on notice?
Communications budget.
I'm sorry, the communications budget. You've hit on something I feel very strongly about. If there's one thing that I think ASIC continues to do better, I hope, is to be more communicative with the general community and the market. We do have some excellent communication resources, but it is up to people like me to speak up and to communicate and to educate and to lead in this area. And I can reassure you of that much, that the Commission will redouble its efforts in this area of consumer education and investor protection and try to avoid this thing happening again,
So if you could tell us what your communications budget is, that'd be great.
And we'd be happy to, Senator. We'll take that on notice if that's okay. We'll also send you the link to
Money Smart,
part of the Money Smart webpage, which is designed as a consumer communication to the managed investment scheme section, so that hopefully if you have some suggestions of what we might look at doing there.
That's a good idea, Kathy. We'll send that through as part of the submission. It's on our website.
I mean, my observation, and if you could also just tell us as well, how many FTE within your organisation are in dedicated communications roles, that'd be great. And if you could let me know, if you could let the committee know rather, how much you're spending on kind of proactive. If you're able to divide your communications budget up so that we can see the difference between what you're doing in a reactive space and what you're doing in a proactive space, that would be useful. My concern is, and this will be it for me, Chair, my concern is that many of these schemes, which I personally believe are consciously, structurally unsound, and service to put people's money and savings at risk. People come into contact with these schemes in highly contested communication spaces, which is a convoluted way of saying online, whether it be in social media platforms or they send emails or whatever. And I think there's a real role for the regulator in that warning capacity, in that communications capacity, also to be in those spaces, and particularly.
We can. That sounds terrific. We can, I think, reasonably easily divide the money we spend on communications for Money Smart and similar sort of consumer-focused programs, and get that to you. And we'll also send you through a research paper we did with a Dutch regulator, which flags that the perils of disclosure as a key tenet of our regulatory system, because people, the whole behavioural science
Well, the Ripoll inquiry, actually.
Yeah.
Yeah, well, that's actually in our submission.
But the work we did on disclosure is not the whole answer. I think
that'd be really good. And if you could also include, if you have such a thing, whether you have a budget and also FTEs allocated to direct community engagement, because also what I have learned through exploring this issue is that there are particular communities which are often the subject of more or less targeted by people offering these products, particularly at risk people. And yes, there really needs to be proactive, in reach to those communities, understanding exactly where they are particularly getting their information. Because I can tell you now, if there would have been steps, if there would have been the opportunity to get in the time machine and have somebody potentially from, ASIC or somebody contracted by yourselves to sit down with some of these folks and help them go through these complex products.
It is
to make it more
it's a really good, it's a good point. It's a question of allocation of resources. So, for example, one community that is often at risk is we have an Indigenous outreach program which is designed specifically to help deal with some of the financial system issues for particularly Indigenous consumers in remote communities. So we can send you some information about that program, for example.
Okay.
Thank you.
Thank you very much. Thank you, Chair, and thank you, Senator Pratt. This has been a great inquiry.
Yep. Thank you, Senator Steele-John. And Chair Longo, I should say that these are issues, the issues Senator Steele-John is raising are issues I also raised in my questions to the relevant Western Australian Government Department after they had a number of officers attend a seminar and had concerns with respect to what was being promoted. And it just seemed to me that there was a window of opportunity at that time for that government agency as well to reflect on whether or not the elderly were aware of the risks involved in terms of residential tenancies as they're set up in Western Australia being used to provide this sort of long-term certainty around future occupation and rights of residency. So I don't think this is just a question for ASIC. I think it's a question for all the relevant agencies that have within their purview any of these obligations. So we are going to just suspend briefly. I think you understand the arrangements we're entering into. and then we'll reconnect shortly. So I'll adjourn at that point, and then we will rejoin.
Thank you. Thank you.